Good afternoon, or good morning, or good day for some of those who are joining us online. My name is Matlu Kalaba, and I'm a BFAP Director and Analyst. And today I have a simple job of making sure that this program runs smoothly. Hopefully, it will run smoothly. So, all of you, welcome to the BFAP Baseline Outlook 2022 up to 2031. This is our 19th baseline, and we have done so in a row without a break, even during some of the most difficult times in our lives. Speaking of the difficult times, I think let's just all of us take a moment, 30 seconds, just pause to appreciate and be thankful that we have made it through these difficult times. Thank you. So let me again just officially and formally welcome you and also recognize some of the most important people, and all of us are important, both online and here, but there are some who really deserve or need to be mentioned, starting with the Director General in the Department of Agriculture, Land Reform and Rural Development, Mr. Ramasodi. Ndade Ramasodi, welcome, and we are thankful for your presence here. And furthermore, we have the BFAP Board Chairperson, Anna Marie van der Merwe. Thank you very much for coming. We have a number of dignitaries and representatives from government. I see Dr. Ntabele is here. I see Dr. Maginga. I see John Roja from Department of Trade, Industry and Competition. There are a number of representatives, even those who I'm not able to see their names, their faces, see NAMC, ARC. You are all welcome, and we are thankful for taking your time out of your busy schedule to come and share this afternoon with us and listen to what we have to share, as well as take into account your inputs into our baseline presentation. So as I said, my job is simple. I'm not the one to be looking at for most of the day, but our program is as follows, those who have it in front of you or on your laptops, but just to summarize, we'll have Ndade Ramasodi, the DG, coming to just open this 19th baseline outlook officially. That will be followed by an overview of the BFAP baseline 2022 to 2031, and that will be presented by Dr. Tracy Davids. And then after that, some implications from that overview will be shared by Prof. Freddie Meyer, who is the Managing Director of BFAP. And then we'll have a short break of about a quarter of an hour, and then we will then come back and listen to the panelists when we have a panel discussions. And the participants will be introduced there and then. But at this point, I really need to say one or two things before I call Ndade Mogeza over here. Is that as the Director General, he is the highest civil servant in our agricultural sector. And for BFAP to have such a high person in office coming to spend some time, 2 hours with us, that can't be taken for granted. So it's highly appreciated. But secondly, it also shows the extent to which this event is considered by all of you and those of you who are present here and online. But Mr. Ramasodi started his career at the very bottom and came up the ranks until he is the person I just described he is at the moment. He started as an extension officer, serving the rural areas, sharing extension advice with the farmers. And I repeat and emphasize rural areas because that really tells the levels where he started, the grassroots. Then over the years, he came up He became a technician, plant and health in the Department of Agriculture. He has been a director, deputy director general, and he has seen it all. He has faced it all. And he has gone through the challenges, of course, the gains as well. But the point I'm trying to make is that as a director general, he comes from the humble beginning in our sector, both in terms of the sector as well as the understanding of the dynamics of the sector, but also of government, including our country, South Africa. Ladies and gentlemen, let's welcome Ndade Ramasoli.
Thank you very much, Dr. Kalaba. You forgot something in my CV, that I was once a student with you.
There's a reason I left it out.
Yes. Thank you very much, and we once served in a faculty council somewhere the north of this city of Pretoria. Thank you very much, Dr. Kalaba. Let me also welcome my fellow panelist, Meta Binkosi, during this Women's Month, and let me also greet all the women who are in here and say this is your month. We hope that you'll enjoy it. Let me also greet my fellow panelist, Ntate Johan Kotze from SAPO, who over the years we have had and shared quite a lot of insights with. I would also like to greet today the board of the chair, Mayor Annemarie van der Merwe, Prof. Mayor, and the team, the fabulous team from BFAP. I would like to greet all the captains of our industry. I think over the years I've come to realize that this is where we all congregate and have the outlook and pep each other. Thank you very much. I would also like to welcome fellow government employees who are here in all your various capacities, viewers and listeners. Ladies and gentlemen, good afternoon. After receiving the invitation to this August occasion, an engagement on agricultural economics community of practice, and the theme, balancing short-term tactical responses with long-term development goals, I had no hesitation in accepting the invite for various reasons. Firstly, agriculture plays a role in South Africa's economic reconstruction and recovery plan, and therefore the path that we have got to follow during and beyond the COVID-19 pandemic. Secondly, government recognizes and appreciates that the latent potential of agriculture and agro-processing sectors towards the amelioration of the triple challenges of poverty, unemployment, and inequality. Hence, the signing of the Agriculture and Agro-Processing Master Plan by various value chain actors within this ecosystem has heralded an era where we all have got to hold hands and move forward in tandem. Consistent with the theme of this August occasion, the AMP plays the short-term responses and development goals get to propel the agriculture and agro-processing sectors and industries to a higher, inclusive economic trajectory. Lastly, agriculture and agro-processing industries are significant contributors to the economy through foreign exchange earnings via exports, also employment levels. Therefore, this engagement, ladies and gentlemen, presents to foster and also strengthen public in the field of processing and commerce in general. It would be remiss of me not to mention the African Continental Free Trade Agreement is opening new opportunities for deeper regional integration. Currently, the intra-African exports makes almost 18% of the total trade, compared to the 59% and 70% of intra-Asia and intra-Europe trade, respectively. In 2020, intra-African trade was down to 16%, mainly attributed to COVID-19 related supply chain disruptions that we all know of. Poor infrastructure, non-tariff measures, and limited food output is largely the cause for limited intra-African trade. Noticing the potential benefits of this free trade area, South Africa deposited its instruments of ratification on the 10th of February 2019. Parallel to that, South Africa has embarked on the infrastructure development drive to promote regional integration, as articulated in the Agriculture and Agro-Processing Master Plan. On a medium to long term, we have got infrastructure requirements that are meant to deepen regional integration. Infrastructure backlogs, both on farm and off farm, are a challenge not only to South Africa but also to the entire African continent. The World Bank estimates that Africa's infrastructure gap requires all around $360 billion to build energy, water, ICT, and transport infrastructure. And these networks are very important in terms of this sector of ours. If we just glance at Pillar 6 within the Agriculture and Agro-Processing Master Plan, we dissect the comparative disadvantage of the agriculture and agro-processing sector resulting from infrastructure challenges. In mitigating this, the President of South Africa has established an investment and infrastructure office in the presidency to coordinate and align investments and work on various structures responsible for economic and social infrastructure development, leveraging on public and private funds. To date, we have 203 infrastructure projects that have been evaluated with 1.8 trillion rands. About 13 of these are in the agriculture sector, and one of those are the flagship programs that we have in the department, the Farmer Producer Support Units, which will enable our farmers to access technology, import markets, storage facilities, and irrigation schemes. In the execution of these FPSUs, we have also enlisted the services of the African Development Bank. We are of a firm view that successful completion of the bulk infrastructure projects will enable global competitive performance of the agriculture and agro-processing sectors. The total gross value of agricultural output in South Africa during 2010-2011 was a meager 144 billion. And this figure has almost doubled by 2017-18 to 277 billion. In 2021, the total gross value of agricultural output was recorded at 342 billion. It is important to indicate that this growth and input was not necessarily accompanied by an increase in hectares under production, but rather the result of improvements in terms of yields or productivity. In South Africa, and the rest of the world for that matter, research and development, or rather research for development, as we would like to call it, in the form of biotechnology, is becoming increasingly critical for the development of high-yielding varieties that are globally competitive, albeit at the backdrop of climate change. To this end, the government of the Republic of South Africa, guided by Pillar 3 of the Agriculture and Agro-Processing Master Plan, is intentional about our R&D by using statutory levies to improve on the global competitiveness of our sector. Social compact nature of the AMP forces integration and cooperation by value chain actors on R&D endeavors. One of the critical issues that we have got to look at is farm mechanization, irrigation solutions in the short to medium term. Research reports indicate that the total gross capital formation in agriculture in South Africa increased from 9.2 billion in 2010 to 16.4 billion in 2020, representing a growth of 77% in 10 years. This includes fixed improvements, as well as tractors, machinery, and other implements. In terms of the hectares, the total agricultural land that was under irrigation in 2020 was about 1.3 million hectares. As a water-scarce country, growth in irrigation areas in South Africa is generally limited by the availability of irrigation water. And I know that quite a lot of industries that are gearing towards growth have got difficulties in terms of this area. This means that the country must consistently seek innovative solutions via research for development to produce more agricultural output with the limited and scarce available water to meet the growing food demands of our growing population. Our expectation, amongst others, is that the session reflects on the experiences that we'll have shared with the community of practice in attendance today in relation to adaptability, affordability, and appropriate solutions that may be suitable for African farming. South Africa is an export-orientated sector generating almost 55% of its annual value added on foreign earnings. Its linkages with international markets makes it very vulnerable to global and external shocks such as conflict between Russia and Ukraine, as we have experienced, COVID-19, as we have experienced, and later on, the bans that we will talk about in Asia, Europe, and the Americas. Due to these external shocks, food prices in South Africa have been increasing, causing concerns to our customers, whom are already battling with the harsh economic and job realities. The prices of grain commodities such as sunflower, wheat, maize have increased by a range of between 30 and 50% in the first quarter of 2022, as compared to the corresponding period in 2021. Fertilizer prices have skyrocketed by close to 150% compared to last year in quarter one. The cost of a typical food basket in South Africa was measured at 1,070 in April of 2022, and this should be concerning, pushing the customer food inflation beyond the targeted 6% on the upper boundary. Not only South Africa is experiencing elevated food prices, but almost all countries across the globe. In mitigation to these external shocks, countries in Asia, Europe, and Americas have instituted a series of trade measures. Some of these measures are impeding on trade. It is generally agreed and accepted that market access by an exporting agribusiness is determined and subject to a number of factors, such as transaction cost, the tariff regime, and an assortment of government regulations, as you would know. Recently, the non-tariff measures are more diverse and to some extent less transparent. These represent a significant barrier to entry into global markets. Amongst the most important of the non-tariff measures in the trade of agro-food products are sanitary and phytosanitary measures, as we call them SPS measures. Notwithstanding the importance of such measures of protection of plant, animal, and human health in the importing country, we will have to face difficulties and deal with them as they arise. Often, when these SPS measures are conceptualized, programmed, and implemented, they are implemented in a way that makes it unnecessary or even tedious for exports of certain exporting countries and agribusinesses to compete. Hence, they can constitute trade barriers as effective as monetary tariffs. While tariffs and quantitative restrictions to trade have declined, there has been a growing recognition that the new measure that we have got to deal with are SPS measures that can impede trade of agro-food products. Attempts have been made to reduce these trade distortive measures through the WTO, and the recent 12th Ministerial Conference tried to deal with these issues, but no solution was found. We have got to agree that some of these solutions are inefficient and fail to address many of the key problems that we experience. Which brings me to a point that I know that most of you would like to reflect on: the issue around biosecurity in our country. Biosecurity is a shared responsibility. It is everyone's responsibility, and therefore everyone needs to tend to their responsibility so as we can protect the economy, the environment, and the community from these threats. We are currently experiencing an outbreak of foot and mouth disease, and we have promulgated a standstill on the movement of cattle for 21 days. I understand this is a very drastic measure and maybe the last in the artillery of measures that government has in order to stop the spread. But as I read in the Farmers Weekly this week, what would be the alternative? We need to preserve our industries and ensure that the plans that we have entrenched for the growth of our sector, as will be articulated later on today, remain on a critical path of success. In implementing measures, it will be very difficult, and I know that it is difficult, and it's going to. But we have a course if we envisage the growth and transformation in our red meat industry or in the wool industry that is currently facing the very same challenge that I had to address this morning in my engagement with China. The international front has been confronted with the issues around China. We have been confronted with the issues around the EU on citrus. The new measures that were put in place to mitigate against the false codling mouth by the EU are technically unjustified. And we continue to engage on this at a technical level and through the WTO dispute resolution mechanisms that are being provided. These measures run the risk of undoing the sterling work that was done by the citrus industry and our industry over the past decades. These are but and biosecurity concerns that we are having. We can only overcome this by having meaningful partnerships within this sector. Biosecurity can hardly afford any stand and cake approach by any partner, and we have got to share the responsibilities. In conclusion, it is projected that through the World Bank that agriculture and agribusiness in South Africa will grow to 1 trillion industry by 2030, US dollars, 1 trillion US dollars. This shows the enormous opportunity for economic growth for our sector. In the long term, the critical pillar of market access to access the Africa Continental Free Trade Area, to access the Africa Growth Opportunity Act, AGOA, the Economic Partnership Agreement, the IPA, the Forum for China and Africa, FOCAC, will provide the basis for exploitation of the trade opportunities that we have as a country. In the short term, market access will dictate the achievement of the long-term strategic objectives that we have. Hence, recently, with the signature put on the Agriculture and Agro-Processing Master Plan, we have set out the short to medium to long-term plan on how to develop a globally competitive agriculture and agro-processing sectors that are driven and are market-orientated and inclusive in production to develop our rural economies, ensuring food security and growing decent and inclusive employment in our sector. Allow me, Program Director, that I have got to wish you a frank and robust engagement. I have got no doubt that BFAP outlined that we'll have today will continue to influence the policy and investment decisions in our country. To the BFAP team, led by the chairperson of the board, well done. To the sector, I implore that we utilize the baseline that we will receive today towards our continuous reimagining of a sustainable agricultural and agro-processing sector. I thank you.
Thank you, Ntate Ramasodi, for those insightful comments and useful information that is really relevant and fits into some of the developments that will occur in the next few minutes. But we sincerely appreciate you making time to attend, to share, and as I said, give us those insights into what's happening in a broader picture that obviously we not always have access to it. But the kind words at the end are also sincerely appreciated. So some of the points that you made about, let's call it turbulent time, be it in the agricultural sector, in the global markets, are some of the things that will unfold, as I will be calling on Tracy to come and share with us. But we always make a disclaimer about the baseline. It is in the book, and those who are able to download it online, you will find it, but it's important to repeat it that the baseline and the outlook is not a prediction of what will happen. It is just one set of possible outcomes. It depends on a number of things that gets done. It depends on things that will unfold tomorrow or in the next few years, and not necessarily what will definitely happen. And as DG has said, we are in an era of turbulence, but we have gone through some of these periods in our lives. So surely we should come out the other side still fine. Thank you, DG. And with those words, let's welcome Tracy to the podium, and then you can share the outlook with us.
Thanks very much, Matlo. Matlo's kindly stolen my disclaimer that I was going to give at the bottom at the start of this. So I think in all the time we've been doing this, we've often said that there's a lot of uncertainty around the outlook, and I think in the time that I've been involved this year probably has the most uncertainty around the outlook to date. But it should also come through in the presentation, I think, how these uncertainties might influence the path that we see. So as Matlo said, we'll give you one possible outcome that we think is plausible. I guess our challenge also is how do we change that outcome? There are many aspects of it that are less positive than what one might like to see. And I think the challenge rests with us as a sector to see how we can move that. So having said that, let's start on a positive note, looking back over the past 2 years. 2 very turbulent years, if one thinks of the broader context in the global economy and the South African economy. Yet the agricultural sector thrived. Amid many difficulties, I think the chart on screen just shows GDP growth over the past 2 years, so in 2020 and 2021. And then the shaded area provides a combination of the two, so comparing 2021 to 2019. And there you can see agriculture right on the left, 25% growth, compared to the next best, which is less than 5%, and the bulk of the sectors which are negative on aggregate. So I think as we venture forward and present our outlook for the sector, it's important to understand what drove this performance and how those factors might change as we go forward. So on screen now, I've just put real GDP growth in South Africa over the past since 2000 to up to date, and then also over the outlook, so for the next 10 years. And there I highlight the past 2 years, which we've just seen relative to other sectors, in combination with 2 previous periods when we had strong support from global markets, which is very much the situation we find ourselves in now. The one being, of course, 2007-8, when we had biofuel coming into the agricultural space, creating new demand impetus, and then the other being the consecutive droughts in the US, which also supported prices. And you can see there the performance is quite similar to what we've seen now. If we go forward one, we should probably just note a word of caution is that the global economy has also turned down previously, and that we also saw spill into our sector. And I think if one thinks where we are at now, post-COVID, with the ongoing war and the concerns around global inflation and a possible recession, that's something worth bearing in mind as well as we look forward. So just to highlight 3 groups of factors per se that have influenced the sector in the recent past, so this past two years. You can't get away from the COVID-19 pandemic. I think we've all heard a lot about it, but the reality is it's still influencing the sector, and this is multifaceted. So initially, we had the big slump in GDP growth. We had lockdowns occurring in various parts of the world. That, of course, influenced our logistics system, caused a lot of bottlenecks, many of which we are still dealing with today and struggling to completely overcome. The other side of that is the support packages and the stimulus packages that were imposed around the world to get demand going again. And those, if you compare them to what was imposed, for instance, through the global financial crisis, they far overshadow the levels that were put back to stimulate growth in the economy. And this, to some extent, has contributed to this disconnect between supply and demand and the supply chain struggling to keep up again. As we were starting to emerge from that, of course, we had Russia's invasion of Ukraine earlier this year. Now, this is not solely responsible for much of what we see in the market, but it certainly contributed, and in many instances made matters that were already there a lot worse and accelerated some of the challenges. So, of course, it created big challenges in terms of energy, in terms of fertilizer prices, and also in terms of agricultural markets, being both these countries being major suppliers of products such as wheat, sunflower oil, etc. And then the last one I've grouped together, so we probably have a lot of factors encompassed in this perfect storm in agricultural markets, but that speaks to some extent to the two factors that I highlighted before, but then also to weather conditions. We saw flooding in some countries, we saw damage from things like hurricanes, tropical storms. We have droughts ongoing in other parts of the world. We have strong heat waves at the moment happening in the Northern Hemisphere, all of which influence production prospects at the moment. And then on top of that, you have fundamental supply and demand dynamics that are influencing markets. So as we look forward, there's probably 4 key factors that we can highlight. How they evolve will be a big determinant in how this growth path evolves. So those are fertilizer and energy costs, shipping delays and also costs, the extent to which world prices normalize, and also the rate at which they normalize, and then domestic and international spending power for your consumer base. So having considered all that, you'll see on the projection on the chart that we foresee still some growth this year, although slower, significantly slower than what we saw in the past 2 years, much of that supported by the field crop sector. But then we see some correction. So then we see contraction for 2 years and then returning to a growth, but quite a conservative growth path over the outlook. So that real GDP just reaching again towards the end of the outlook, the sort of levels that we're seeing currently. If we break that down just into your various subsectors, so there we've just got on the chart the gross production value expressed as an index for the 3 major subsectors and for agriculture as a whole. Of course, this doesn't include costs. Costs were included in that GDP chart, but this is just revenue. And there you can see the star performer of the last 3 years, the extent to which field crop revenue increased over the past 3 years. I think that's phenomenal performance, and it's this rare combination of strong yields and high prices supported by global levels, which you seldom see in the market, but that's been really supportive to that sector. The other side of it, which we don't see in this chart, is the input costs that have also increased sharply and are influencing profitability. The other one worth highlighting then, the blue one, that's animal products. There you can see a sector that's grown fairly consistently. The last few years have not been so good with many animal disease challenges, as noted rightly earlier. And again, currently revenues expected to increase this year, but costs, of course, a major factor. So those high feed grain, those high grain prices spilling into animal feed for those sectors. Then the last one is horticulture. That's the grey one, the one that grew the fastest historically, but over the last few years has been very flat. And last year and this year actually expected to decline. And of course, that becomes a very concerning picture if you think revenue is declining in an environment where costs are increasing. Much of this is because there's additional volumes coming into the market, but also with things like market access, logistical bottlenecks, all contributing to that pressure on revenue. So the logistical issue is coming very much from global markets. I've got 3 charts here to show you. So the first is global schedule reliability. There you can see we've plotted multiple years. If you compare the purple line, that's 2022. to, for instance, 2018-19, which was before all this chaos in the world happened. You can see how that declined in 2020 through the latter half of 2020, stayed very low in 2021. And while we have started to increase now, we're still only about half the level that we saw pre-2020. The inverse of that is the average number of days for late arrivals, which have literally doubled compared to those 2018-2019 levels. Again, it's moving now in the right direction, but we do have a long way to go in terms of reaching the levels that we were at before the current challenges. The one that's really scary is if you look at those average freight rates. And if you think, over the past 14 months, those have increased close to fivefold. So extreme run-up in those freight rates from sort of the second half of 2020 through 2021. They are now coming down, but still very, very significantly above the levels that we saw prior to 2020. So this, of course, is a major factor for all imports and exports, but sectors such as horticulture, which derive the bulk of value from exports, it's playing a significant role. So price gains, this comes back to that field grain performance. So we saw the sharp increase in prices. I've plotted there just the FAO, the food price index. There we saw the extent to which prices have run up, particularly look at the orange line, that's vegetable oils, but cereals have run up. All of them have started turning around. If one looks at recent months, we are starting to see the situation turn. The ones that are still lagging are the livestock sectors. So meat prices still high, even though they haven't run up to the same extent, and dairy prices still high. But then, as I said, we have to consider those in combination with input costs. So on the right-hand side there, we've just plotted Brent crude oil and natural gas, which of course is energy, but also raw materials into things like fertilizer. And at the bottom, we've plotted fertilizer prices. And there you can see also the extent to which fertilizer prices have run up in the last few months. Again, we have seen them turn. Some of this has also got to do with trade and trade patterns and logistical systems starting to deal with what we saw happening in Russia. So when the invasion first occurred, we had a lot of challenges. So many countries imposed sanctions. Others did not, but then it was not necessarily logistically possible to trade. But we have now started seeing fertilizer move, for instance, from Russia into Brazil, which has also settled fertilizer markets globally down a little bit. But those have not even come close to the levels that we had before. If we move on looking at just the global economy, there we've also seen significant downward revisions in recent months. So on screen, we've got the GDP forecast as was done in December 2021, and then again in June 2022, and then you'll see the extent to which that was revised downwards. So at a global level, a 1.4% reduction in growth expectations for this year. China, of course, still maintains its zero COVID policy, and that's a key factor that's still influencing logistics and also influencing its own growth prospects, and with that also the global growth prospects. Then the war in Ukraine, which obviously has a massive humanitarian crisis associated with it, but it has also caused significant damage economically, and resulting in these reduced expectations in many parts of the world. It brings with it also elevated inflation, which has made it a very difficult policy space for central banks to operate in, because you're in an environment where growth is at risk, but you're also trying to manage high inflation expectations. And that, of course, is a very delicate policy trade-off. We have seen interest rates start to increase around the world, and we also do expect that to continue for the foreseeable future. If we then come to consumer spending power in South Africa, on screen, we've got a chart illustrating class mobility. So the blue bars, those are from previous baselines. Some of you that have been attending this event might remember the LSM classifications that we used to show. This is a measure that is no longer undertaken. It's been replaced by the socioeconomic measurement. And what we've done here is to try and relate the two to each other, at least broadly, although they're not perfectly relatable. But the key point to make is that if one looks at the history and the extent to which the share of population sitting in your lower income groups have declined from 2005 through to 2015, for instance, with a rise in your lower middle, upper income and affluent consumer base, And then you look at the SEM for the last 3 years, you'll see that the lower income group still declined, although slower than what we've previously seen. And there's many factors that contribute to that, amongst which could also be the COVID-19 grant. We have seen a significant increase in the lower middle income group, but the concerning fact is that part of that increase is coming also from reductions in your upper middle income and your affluent group. So you have consumers shifting into the middle, whereas ideally we want to see everyone moving up into a higher income bracket. And this then, of course, reflects also your consumer spending power. Some key metrics: real GDP per capita, which declined by almost 70% in 2020, positive for almost 4% in 2021, 1.3% in 2022, and the expectation on a per capita basis is around 1% growth over the outlook. So that's really not very fast in terms of our local consumer base. We've seen debt levels increase, so the gross debt value in nominal terms over the past 10 years increasing by 66%, credit application rejection rates increasing by 44%, and also your grant dependence increasing from 45% in 2019 to 53% in 2020. So all of these metrics pointing to consumers that are a little bit under pressure. The implication of that, just broadly in terms of demand, on the left on screen, we've got per capita consumption of basic food staples, in this case just meat and white maize. And then on the right, we've got per capita meat consumption. So there, I think it's quite clear if you look at the meat, the purple bar, for instance, the extent to which consumption growth has slowed over the past decade. And that remains the case in the short term. In the medium term, as the economy starts to recover and inflation gets more under control, we do see more growth there, but particularly in your more affordable meat types, so your chicken and your pork. If you look on the left-hand side, then that speaks to white maize and wheat, and there we've seen, whereas in the long term per capita consumption levels have actually been declining, that has turned around and they've now started increasing again. And over the outlook, particularly in the short term, that's a trend that sustains before flattening off then over the second half of the outlook. So just a brief focus on the three subsectors now. I think that's provided a bit of a broad overview and a picture, some key messages from field crops that we want to highlight. Firstly, the strong revenue gains. I think we've spoken to that already. Good yields and high world prices, but we've got good stock levels. We have had big crops. We are sitting at export parity, so if world prices normalize, we do expect our own prices to come down as well. That, of course, is good news for your consumers from a food inflation perspective. But from a producer's perspective, it implies that competitiveness will be key. With these very sharp increases in input costs, significantly increased risk for our producers. In a year like the current, where you've had good yields, that's okay, you can carry that. But of course, the risk of not having a good yield has increased significantly in this higher income cost environment. And then we expect this cycle of profitability to turn, right? So we expect profitability to come down a little bit. But the past few years have really provided the opportunity to reinvest. We've seen very strong machinery sales, for instance, equipment to do with precision agriculture, all of which then should put us in a better position to deal with it when the cycle turns down again. So just in terms of global prices, I said in the beginning, one of the key questions is how quickly will world prices come down and what extent will they come down? This is the assumption that we're working with. It's quite scary if you look at those short-term numbers, the 2021, 2022 levels. We do expect them to decline in the short term, but again, there's a lot of uncertainty around it. So just to highlight a few factors that will influence that and how it plays out. Structural demand factors such as renewable energy, this acceleration, the renewed impetus into renewable energy, particularly with the ongoing war. It's creating additional demand, particularly in the vegetable oil space. China's recovery following their ASF outbreak, so their African swine fever outbreak is a few years back now. But the rate at which we saw their pork herd recover is really impressive. And apart from that, we've also seen a bit of a restructure. So it's recovered through big commercial units that use feed very intensively, which have replaced many smaller producers that were not using feed that intensively. So the demand aspects of that with respect to feed grains is quite significant. The next one is animal health. Of course, in the short term, things such as ASF, such as avian influenza, which is happening in the Northern Hemisphere, are all influencing short-term supply prospects. We've seen various challenges with palm oil supply over the past few years to do with labor, to do with too much rain, to do with too little rain, many aspects influencing how optimally that product was harvested, and this was, of course, a key driver in vegetable oil prices. We've seen trade policies, as mentioned earlier by the DG, many countries responding by restricting trade, which added an additional layer of uncertainty into a market which was quite volatile already. One of those was Indonesia with palm oil, which has since been opened again. We've had numerous weather events, and these are ongoing, and I think this is probably one of the biggest uncertainties with respect to how quickly these prices come down, is how the weather plays out with the current conditions, for instance, in the Northern Hemisphere, a key concern. And then the last is stock levels and tradability. So the level of absolute stock and also where the stock is and how easily it can be traded into the global market are all key factors to consider. So I'm sure you'll agree that there's a large degree of uncertainty around all these factors, and that will influence how quickly these prices come down. What we have more certainty around is that in the medium term, we feel that they will, but we also think that they won't come down to the levels we saw prior to the current turbulence. So there's a lot of factors that underpin that, but just something like the risk and the extent of risk that will remain in the market is worth mentioning. One of my colleagues mentioned a just-in-time economy as opposed to a just-in-case economy, and I think that's very much where we're sitting at. So much, a bigger stock requirement and a bigger risk premium in the market. If we just zero in on stocks very briefly, the charts on the right now show at a global level the maize stock-to-use ratio in blue at the top, and then prices in green. And this is the point that we're trying to make. If you look back to, say, 2012, 2013, the stock-to-use ratio was around 16%, and the maize price was $300. If you look at the current year, the expected stock-to-use ratio at the end of the year is 26%, yet the year-to-date price is well over $300. So much higher stock levels, and yet prices have run up much further. And a lot of that is to do with uncertainty, but a lot of that is also to do with where these stocks are. So if one looks just at maize, for instance, 65% of that sitting in China, so there's some degree of uncertainty around that. And then in sunflower, for instance, a very big share sitting in the Ukraine. And we have seen the deal now to enable exports, but the extent to which this can be traded in the global market practically is still uncertain. Just the last point to remember, as I've noted earlier, the fertilizer prices. So this is just the outlook for global fertilizer prices. That is also coming down, but arguably a little bit slower than what we see commodity prices coming down. And this, of course, then has an influence on your profitability. So if we just look at that profitability now, this is in South Africa. We've plotted an index, a combined index of summer crops, dryland summer crops, and irrigated summer crops. You can see how those margins have increased over the past 2 years, and you can also see the extent to which they come down in that period that's highlighted in red. They don't come down to 2018-19 levels, which is, I think, important to note, and then they do start to increase a little bit from there. The other important point to make is that all industries didn't have the same price support. So these industries, your maize, your soybeans, your sunflower, they're quite well integrated into the global market. On the right now, we're showing potatoes, and that's obviously an input-intensive industry. So those high input costs having a significant impact in that industry, but your pricing is very much more determined in your local market. So it's much more of a local supply-demand dynamic. And then we see margins coming under pressure earlier because they didn't have the same extent of price support in 2022, for instance, to be able to ride out those input costs. From an area perspective, we've just plotted on screen your total summer and winter grain area. On the left, there you can see how it has increased already, and if we look at the expectation for the 22-23 season, that's actually for the biggest summer crop area in about 25 years. So it's the biggest summer crop area since basically markets were deregulated, if one looks at that projection. That's, of course, coming from the good profitability that we've seen, but if one looks forward, that also comes down again as those margins come under more pressure. Interesting also is the composition. So over time, we've seen oilseeds, for instance, making a bigger contribution to that total area. In 2010, that was 18%. Oilseeds as opposed to the rest being grains. 2020, that increased to 28%, and in 2030, that increased to 36%. So oilseeds playing an increasingly important role within that area base. If we just look then at relative shifts over the outlook, here we've got on screen just a change in area over the 10-year period of the coming decade, so comparing 2031 to an average for 2019 to 2021. And there you can see some normalization, for instance, for white maize, sorghum coming down again, sunflower seed coming down a little bit, and then still some growth for yellow maize and for soybeans. Of course, if one looks at production, you also have to consider your yield growth. So fairly consistent yield growth. Of course, over the baseline, we know this will be volatile, but in terms of general trend, we do expect some growth over the baseline. As I said, they're all expanding in the short term based on profitability. In the medium term, one then has to look at relative profitability and also risk perceptions with respect to the various crops in terms of driving the shift between the different products. Quality of products, a major factor influencing decisions. When we've had wet years like this, something like maize, for instance, we have had some challenges with milling quality maize. Soybeans are increasingly successful in the western parts of the country. I think producers there have done a lot of experimenting and understanding the crop a lot better, and we see that reflected also in yield levels. It's also a crop that's handled the past the wet years pretty well. Sunflower is typically considered resilient in drought conditions, but of course has risks with respect to something like sclerotinia. And also in periods where production expands very quickly, often in years where rainfall is late and then we plant more than what we ordinarily would have, we see prices respond quite significantly. So I think that that market can outproduce itself quite quickly. But important to note is if one looks at that bigger picture, even in sectors where the area is declining, we see sufficient yield growth to sustain production growth over the outlook period. Just in terms of where that ends up, on screen we've just got the use of the various products. So of course, that composition and the channel into which it's sold also influences your demand side. So your basic food staples, as I said, short-term increasing and then stabilizing in the medium term. So we've got growth of 13% there for white maize, 14% for wheat, 16% for sorghum. Then industries that are more driven by animal feed demand, so your yellow maize growing a little bit faster at 17%. And then, of course, soybeans, which is crushed predominantly for the protein meal, that's growing at 47%. So that should be caveated, I guess, to some extent, because that's not all coming from growth in feed demand. Some of that is also replacing oil cake, which we're currently importing. And then the last one is vegetable oil. So soybeans, of course, contributing to that, but sunflower is crushed predominantly for the oil. And there we still foresee demand growth, and we also foresee that we'll see a continuation of the import replacement that has occurred over the past few years. So just the last one then on field crops. I think we've said soybeans have come out quite strongly in many of these previous charts, so it's worth just a quick focus on it. On the left-hand side there, we've got production, consumption, net imports of soybeans along with prices, so domestic prices situated within that parity band. And I think from that it's quite clear that in the short term, soybean prices have now dropped to export parity levels, and with the growth that we're foreseeing, we expect them to stay close to export parity. So you'll see that we've actually switched into being a net exporter of soybeans there. We are also processing more, as you saw from the previous slide, which means that we can continue replacing imported protein meal. So if you look at the protein meal on the right-hand side, that compares what we're producing from canola, sunflower, and soybeans to net imports of total oil cake. And there you can see that soybean oil cake production increased by 1 million tons over the past decade, and then adding another 340,000 tons over the outlook. There's always that little bit that we're not fully replacing, and much of that is going into the coastal markets. Whereas, given transportation rates and efficiency to move the product from upcountry into the coastal regions, there's a time of year through harvest where it probably can occur when prices drop far enough below, but then there's other times of the year where it's cheaper to import it into your coastal markets. So if we just switch then to animal products, I think I've mentioned earlier, this is a sector where revenue is growing, but they are severely challenged in terms of profitability by these high feed prices. So The same prices supporting our grain producers are making life difficult for our animal producers. It's a relative luxury product in the food basket, so it's quite sensitive to consumer spending power, and I think that's important from a demand perspective, which makes us then note that we'll need to accelerate exports if we really want to accelerate growth in these animal sectors. So on screen, we're just showing a look at profitability. So we're comparing here very basic indicators, so meat to maize price ratios for chicken, for beef, and for pork. We've got an international indicator in the dotted lines, and then we've got the solid line is in South Africa. So there's a lot of interesting factors that we can pull from that. Firstly, it shows clearly that revenues are under pressure, so our profit margins are taking strain there. Many of that's due to international factors, all the factors that we've talked about. So we see the same trend internationally that we see domestically, which is different from an earlier period, so for 2015-16, where it was domestic factors driving up feed grain prices, and then we saw a disconnect with the global market. The good news is that these things are cyclical, and once these international grain prices normalize, we do also see that spilling into your profitability of livestock production. This is both locally and internationally, but it's important to note, given the expansions happening in China, that the equilibrium where pork prices settle is probably a bit lower relative to where our other meat prices settle. It also tells us something about competitiveness, right? So if one looks at the relative positioning of those charts, look at beef, for instance, the domestic beef to maize ratio is sitting below the international one. This is a sector where we're a net exporter. And then if you look at poultry, where we're a net importer, that's the other way around. And then pork is quite strongly comparable. So, but broadly, this is showing, particularly if you look at beef and pork, that these are sectors that can compete very strongly in the international market. If we just look forward then to the demand side, on screen, we're showing the demand growth over the 10-year period for the various meat types. We've disaggregated that into what gets produced locally and what gets imported. It's clear from that traditionally this is a market very much orientated towards our domestic consumers. But given the spending power environment, the picture that we sketched earlier for our domestic consumers, the growth is slowing drastically in that environment. So it also implies that we may have to look wider if we want to go forward. Affordability and value for money, key considerations in this consumer environment. So obviously if your spending power is under pressure, then affordability becomes even more important than what it normally is. And that's also why we see chicken playing such a big role in our meat market. If you compare the chart that just come up on screen, you'll see that 65% of South Africa's meat consumption is chicken, compared to globally, for instance, it's only 37%. Broadly, we would say production growth is possible. We are still projecting production growth in these industries, even if the demand side slows quite significantly. In some instances, that's because exports can grow. Something like beef, for instance, it's growing its share of exports in the market. But also in others, it's possible to replace some imports. So you'll see for poultry, for instance, that the share of imports in your total consumption is declining over time. If we just look at those chicken imports there, you can see some of the trends over the past few years, and I think that's an encouraging picture. On screen, we're showing total chicken imports disaggregated by HS code. So if you look historically, when imports expanded so quickly, much of that was occurring in your bone-in portions, so the purple part of the chart. And that's also where we've seen them come down over the last few years. So this is an industry where we've had significant investment into expanding domestic production. The poultry master plan was finalized a few years back now. But this is also then, given those investments that have occurred, the fact that we've been able to reduce imports by 18%, we need to then make sure that those investments are sustainable. If you just break down those bone-in portion imports a little bit, I've got them on screen disaggregated firstly at the top by product. So there you can see the major products contributing to that. It's predominantly leg quarters. And then at the bottom, we've got disaggregated by country. So the same volumes. I've broken out there Brazil, and then 4 EU countries, which I've broken out separately because they are the ones that are involved in the current anti-dumping duty application. Then the rest of the EU, the USA, and other. So there it's quite clear that the contribution from the EU has reduced over time. This is partly because of avian influenza in the EU. But even from Brazil, those imports have reduced over time. So this is, of course, this is where it's relevant to consider something like the anti-dumping duty, which was recommended now and has been postponed by a year given what's happening in terms of consumer prices. This is where it would typically have an effect. If we come to the outlook for the chicken industry then, on screen we've got chicken production shaded in the back. We've got chicken net imports, the bars at the bottom, and then we've got this profitability ratio, so your chicken to maize price ratio. I think some important factors to note, again, we've mentioned in all these sectors profitability is under pressure. But if you compare the current chicken to maize price ratio, for instance, to 2015-16 levels, very comparable to what we saw in 2015, but not quite at the level that we saw in 2016, which is, of course, not a sustainable level to begin with, but it just contextualizes the degree of price pressure that we see in the market. In terms of production growth, as those grain prices normalize, those feed prices normalize, this ratio does improve. And if you view it relative to the past, it's actually quite favorable over the bulk of the outlook period. This then implies that where production grew by around 1.2% per annum over the past decade, it's now accelerating a little bit to 1.7% per annum. And much of this is investments that have been made. And it's based on the premise that those factors agreed to in the master plan will be implemented. So something like ensuring free trade, something like the anti-dumping tariffs will be imposed in the medium term. Imports are expected to stabilize around 480,000 tons per annum. As I said, this is provided that trade environment is as has been announced. This largely reflects a stabilization at current levels, so not really reducing further, but not growing either. And it implies that its share in the total market will decrease over time. If we come to beef then, this is an industry that's experienced some wide swings in the past. If you just look at that beef to maize price ratio, falling basically to an all-time low in 2016 and then swinging to an all-time high in 2017. This, of course, is a combination of rising beef prices over that period. In 2016, with the drought, we slaughtered into our herd. So we had reduced supply, we had a sharp increase in prices, and then feed prices normalized quickly when we had the record crops domestically. What that has done is it induced a cycle of herd rebuilding. This cycle was probably accelerated over the past few years when we saw producers with mixed enterprises doing very well with their cash crops, with their field crops. This enabled them to hold back more, to grow their cattle herds. The reality of that is that over the next few years, that production will enter the market. And I think that's an important point to make. So over the outlook period, we're expecting growth of around 1.6% per annum, which is fairly in line with the growth rate that we saw in the past. But we have to note that if those kinds of volumes that we do expect to come into the market are to be taken up domestically, prices will probably have to decline from current levels, at least in real terms. The alternative is that we export more. So you'll see that our export projection is fairly flat. So over the past decade, we saw exports grow by around 17% per annum. Under the baseline outlook, we have that at about 3% per annum. This acknowledges, of course, that there's several constraints with respect to something like animal health. If it was purely an economic simulation, those exports would be a little bit higher. But we know that there are many factors that are prohibiting us from growing exports substantially. It's also a risk factor. So with so much risk in the market with respect to exports, if you put everything just into exports from a producer's perspective, then there's just too much risk about. Enabling faster export growth, getting animal health under control is probably one of the biggest opportunities we have in the sector for inclusive growth. It's been noted by the DG in his opening earlier, but this is a big sector. It's north of 12% of agricultural revenue, and 40% of the herd is already sitting with your smaller producers. So it's a sector with immense opportunity, but it's a big problem currently that we need to solve together if we're going to unlock that opportunity. I've spoken about animal disease, so this just puts it visually. This is foot and mouth. So the map shows where the foot and mouth outbreaks have occurred over the past 3 years. The chart shows the number of outbreaks per province, and I think it's quite a scary number if you look at how that chart has ramped up over the past 2 years. The important thing to note is I think there's a lot around FMD at the moment, and rightly so, but it's not the only animal disease that's influencing our sector. There's many others that's constraining productivity gains that could be had, and also reducing our possible export market avenues that we really need to open up. Just the last one on livestock, looking quickly at pork. So this is a sector that's grown very quickly in the past. We saw production grow at around 4% per annum over the past decade. Profitability has also come under severe pressure, probably more so than your other livestock sectors. If you look at that meat to maize ratio for pork, that's the lowest that it's ever been. Prices have not increased to the same extent that we saw in other meats, partly because our own production expanded quite significantly, but partly also because of global factors that are influencing the market. This is, as we said earlier, it is cyclical, so we do see that ratio improving a little bit over the next few years as feed prices come down. But we'll need to ride out this cycle. So productivity will be critical, and also value chain efficiency, the extent of integration in the value chain, and how you can manage your cost structure will obviously be key factors determining that. Over the outlook, we see production growing at around 2%. You'll see that profitability ratio stabilizes around levels similar to 2018-19, which induces this growth in the medium term. Imports always a part of the market with very specific cuts, but in time reducing the share in total consumption. This is an affordable meat type as well, and if one looks at price paths over the outlook, its relative affordability in the meat basket is improving, which is also supporting consumption growth. So just as the last one, to switch into horticulture, as noted at the beginning, this has been one of our star performers historically, but it's one that's coming under significant pressure. We've seen a lot of investment. We're seeing expanding volumes coming into the market now, but that's weighing on prices, and in this high cost environment, putting severe strain on margins. This is probably being made worse by the logistical constraints in terms of when it occurred. Some of them are global, some of them are our own issues that we need to solve, but they're all contributing to make the price challenges worse. And of course, from our perspective, if we want to mitigate these risks and ensure sustainability in these industries, which are all labor intensive, then a quicker opening of additional market space will be critical, and also ensuring that is competitive. So if we just look back quickly again at fruit prices. So here we've got real prices for various fruit and nut products, export prices. In the decade preceding 2019, you may wonder why 2019. Firstly, it's pre-COVID, but more importantly, it's the period that induced the investment into the volumes that we're seeing entering the market now. So these tree crops have some lag into entering production. And you'll see the positive real price growth in most of these industries which induced that investment. If you just fast forward 2 years and you look at the green lines, which reflect the 2012 to 2021 period, that picture changes quite significantly. So many of them still positive, but much slower. And some of them already pushing into the negative. And that's predominantly because of price declines that we've seen over the past 2 years. So as I said, there's the volume entering the market locally, and South Africa, being a big player in many of these markets, is influencing prices, but it's also being exacerbated by factors like COVID, its impact on demand, like the war happening in Ukraine, and also the logistical constraints, both globally and in our own ports. The important thing to note is that these were big investments made. They labor-intensive industries, and if we're to secure these jobs and ensure sustainability, we really need to prioritize opening new markets for these products. If we just look very briefly at the impact of that investment, here we've got the past 10 years stacked in terms of area. So if one adds all these various fruit and nut products, that was 40% expansion in area over the past decade. Production's still lagging, so there we're at 29%. This is partly the effect of drought conditions, particularly in the Western Cape in 17-18, but also, as I said, trees that still need to come into full production. The big contributors to that area growth were your citrus fruits, and then also nuts, so macadamias and pecan nuts all growing very quickly. With palm fruit and citrus the biggest contributors to the volume increases that we've seen to date. If we just look very briefly at the age distribution of some of our citrus industries, so there we've got the national orchard for mandarins and lemons, and there you can see the big share that's still sitting in those young categories. So for lemons, 40% of the national orchard still below 5 years of age, which is not yet completely full bearing. In the case of mandarins, that's 56%. So what this suggests is there's more volumes coming. So we have seen some volumes enter the market, but there's still some more en route. How we see the outlook then, this is plotting the same chart again, but just over the outlook period, and there you'll see that the area projections are now very flat, so only 3% growth over that 10-year period. But then that's offset by these volumes that are already established and coming into the market. So we see production growth of around 24% if we combine all these products. Area-wise, there's consolidation in wine, palm fruit, and stone fruit. The limited growth that there is very selected for specific varieties, specific areas for table grapes, citrus, avos, and blueberries. And then in terms of volume, the big contributors there is citrus, which you've seen from those age distributions, as well as avocado and blueberry volumes. So if we just look at these sectors individually then, this is the market disaggregation. So it's showing where this product is likely to go. Both historically, it shows exports, how much went into the domestic processing industry, local fresh, and then on the right-hand side, you'll see the line in the middle, so the different coloring, those are your smaller products, so it's just reflected on the right axis on a different scale. I think the growth is clear. All those citrus commodities, 50% for oranges. This is, of course, worth noting because this is the product where the new false codling moth regulations are causing big concerns for the industry. If those kind of volumes need to move into the export market, 40% of those exports are already going into the EU. So this is something that will need to get sorted out. Growth around 80% for lemons and soft citrus. And then some other strong performers, avocados growing at 88%. And then look at blueberries, 160%. So much of that growth. This is an industry that's expanding very quickly. So some of that growth has already occurred. That base period is a 3-year average. So even 2021 compared to 2019 is already much higher. And we do see area growth slowing drastically, but as prices have come under pressure. But again, those volumes are entering the market. I think the big challenge and the big picture that we want to highlight here is the significant additional export volumes that will need to go out over this 10-year period. That implies that we really need to get on top of our logistical issues and that we need to get our market sorted out. So just a view on logistics. On the left, we've got a map that shows where our major ports are. The numbers in the ships, if you're wondering, that's the global ranking done by the World Bank. So where those individual ports came out in terms of port efficiency. So there we challenged across the board. And they're just overlaid with major production regions for fruit types. So it's giving a little bit of an indication of which fruits are going into which harbor. But I think the more important one is if we just look at total number of cartons exported over the next decade, that's still increasing by around 38%. So 38% growth in volumes. And that comes in a situation where our ports have already been challenged. So this just looks at the current season, showing weekly exports of our major fruit commodities. And all those red circles, all those highlighted interruptions there, they're from various factors. Some of them are international. Some of them were the flooding in Durban. It's load shedding. It's Transnet systems. But it's just worth noting, and I think the real challenge with this is that once we have disruptions like that, it implies that those volumes need to shift to later weeks. So now we're pushing additional volumes in weeks we're flooding our markets in subsequent weeks. And this is the imperishable product. So they've been standing, we've reduced quality, so we're not getting the same price. So we're now pushing additional volume of a product where quality has been influenced already. So the net effect of that is if we come back to the price picture, this is showing the outlook. So again, real export price movements comparing the past decade, so the 2012 to 21 period. in blue, and then in green, the 2022 to 2031 period. And I think there it's worth noting that on average, products like mandarins, plums, lemons, pears, blueberries, all in the negative in terms of real price growth over that outlook period. If we just fast forward one and take a different view on those prices. On screen now, we're just showing citrus. So this is, of course, the big one. On the left is a nominal export price index, and on the right is an input cost index, so major inputs looking at fuel, fertilizer, combined indices such as requisites and intermediate goods, and then labor. So that labor is increasing over time in line with the sectoral determination, and then after that at the upper end of our inflation band, so around 6% per year. And there you can see the impact of that. And if you think citrus, around 35% of direct production costs on farm is attributed to labor, then this paints a very concerning picture if you see that the price path relative to the input cost path. And that then, of course, raises the concerns that we were noting earlier with respect to the sustainability and the profitability of these investments and the jobs that are associated with them. So just lastly, to talk about markets. I think we've said a lot about the logistics side, but markets are also important. So our fruit market's typically quite concentrated in the EU. There we've got the different products and the share of product that goes into the EU, from 75% for subtrops to just over 40% for citrus. Why that's important is because if we look at growth, on screen we've just got now growth in our middle class population and where that's occurring in the world. So if you look at that, Asia Pacific is really where it's happening. So the EU is a very important market for us. It's a stable market, but it's certainly not a growing market. So if we need to push additional volumes, this is the regions that we need to be going into. And then if we just add to that the preferential trade agreements, the table that you see on screen we have shown before in previous baselines, but basically it just shows the major markets being targeted in that Asia Pacific region. On the left, and then at the top we've got South Africa relative to its main competitors in terms of fruit export. And then the green and red is the absence or existing trade agreement. So if it's green, there's some preferential trade agreement in place. If it's red, there's no preferential trade agreement in place. So basically it's showing just that most of our major competitors have preferential agreements and also are facing a more favorable tariff structure in these markets than what our South African producers are. So after the fruit, you might feel like a glass of wine, and I think we can do that after the presentation is finished. But I'll just end with one slide here on the wine industry. So this is of course, also a major contributor to our export base. It's an industry that was under pressure, was self-correcting. If one looks a little bit historically at those stock levels at the orange line, from 2015 through to 2018, production declined, stock levels declined, the market was getting to a better equilibrium. Prices that had been declining in real terms for many years had actually increased, investment starting to reoccur, and then came COVID. So we had the big shock with domestic sales bans of alcohol, which was obviously a big contributor for this industry. We also had some difficulties with trade, and then we had stocks running way up again to record levels, well above the problematic levels that we saw already in 2015. How producers have coped with this is to a large extent by going against the industry strategy, which is very much aimed at premiumization, so looking at packaged exports as opposed to bulk. But this high stock situation has forced them into pushing more bulk levels into the export market at lower prices. But at least it is clearing out some stocks for us. So you'll see that from 2023 through to 26/7, we do see those stocks coming down a bit. That's when prices turn. So your very flat production path over the next few years then starts to turn marginally positive over the second half of the outlook. So just some key last thoughts, some key points to highlight, all of which I hope came out in the presentation. The outlook was generated amid great uncertainty. I think we all acknowledge that, and much of that comes from global factors. So of course how those plays out will have a significant impact on how that outlook plays out. Consumer spending is under pressure, particularly in the short term in the high inflation environment. If we're to accelerate growth, we likely will need to look beyond our own market. Animal health, I think this has been raised many times before and also prior to my presentation by the DG, but this is really critical to enable productivity growth and export opportunities. Within the field crop sector in particular, where we see margins closing over the next few years, it will be critical to remain on top of the productivity curves of things like research and development, but also recent investments into top technology, into new equipment, all of which will support us as we aim to do that. I've said before, the high input cost environment has added considerable risk for our primary producers in an already volatile environment. So this is a key consideration. It also has cash flow implications, particularly for your smaller producers. Infrastructure, investment into our ports, I think that's been acknowledged also prior to my presentation, but this is critical. But not just our ports. Our ports are one aspect of that, but there's rail infrastructure, there's road maintenance, a broad infrastructural investment that's required. And then just lastly, to highlight the current challenges in the horticulture sector. I think those came out clearly, but as I've said, this is a sector that employs much of our agricultural labor force. And to ensure that those are sustainable is critical also to keeping those jobs. Thank you.
I think while we're loading the next presentation, you can just stretch your legs a little bit. Don't move out, just stretch your legs. For those who really need to run, you can speak.
Sorry, ek was 'n bietjie lank. Hierso. So, nou daai en operate saam met die.
Okay. I think we can give Tracy another round of applause. She did a great job. So while we are settling again, I think also from our side, from a BFAP team who's presenting, also a big thanks to the BFAP team who's actually sitting online and looking at the questions and also doing all the work on these presentations. Big thanks. And also to our online guests, please send questions. We have a team that's looking out for questions, and they'll also respond to those, or respond to that afterwards, and also harvest some questions that we can pose to our panel. Okay, I think we have a few colleagues out of the room for a quick comfort break, I believe. But in principle, I think we can move on, stay on the program. And again, a great privilege for us to present this baseline to you. And especially with, we have colleagues here in the room. They've been with us for 19 years and helped to support this initiative, be here every year. We're leaning on you for inputs and advice, funding. And it's been really it's been a privilege working in this industry, doing these type of analyses. DG working with you and your team. Now also intensive rounds with a master plan, Sifiso, and all of those negotiations that we've had. It's a true pleasure and a privilege doing all of this work for the industry. What I want to do is roll it up a little bit, do a bit of an aggregate picture. Tracy's given you the per commodity, per sector. A lot of that's obviously in the booklet. What I want to do is roll it up a little bit and look at agriculture from a, let me just see it. Yeah, there we go. There we got there. The question is, can we change the baseline? And this is obviously a question that you can look at our books. We've been doing this for 19 years, so you can track how accurate, if you want to do a point projection saying 10 years ago, where was the maize price? Where did we say where would the maize price be today? And where is the maize price today? Where is maize consumption? Where did we say would maize consumption be 10 years ago? Where's maize consumption today? So in the outlook, you are trying to capture key trends and turning events. in an industry. And that's, for us, capturing those relationships, understanding where the opportunity for growth is, and then more importantly is this little red line. And that red line speaks to all of us here in the room, and it speaks to all of us colleagues online. Can we change the outlook? So Tracy's clearly presented to you what the outlook, what we're looking at. We've got these global dynamics. We've got the reality. We've got these challenges. But we can change the outcome of what this line looks like. And that's determined by us who are sitting in the room and the people who are online. And for that, we want to take a step back and say, what's agriculture's value in the broader economy and in our society? And it really relates to, comes back to the National Development Plan. So in the National Development Plan, and we were privileged to sit with late Prof. Mohammed Karan, designing that strategy, looking at the overarching goals for our country, the development goals, and there were these 3 tiers that we looked at. So the fast growth industries, the second tier of opportunity was obviously in your agro-processing, your multipliers, and the third opportunity for growth was in the new entrant farmers, the underdeveloped or idle farms, and the smallholder farms. So those were the 3 key pillars that this whole National Development Plan was built on, to create the inclusiveness, to create the jobs, and to create the growth. The master plan builds on that philosophy. It's got 6 pillars, and what we've done in the master plan through all of these negotiations, and many of you in this room have been involved in these negotiations. It's not perfect. There have been compromises. A lot of research has been done. We work with NIMC and with CRED in these analyses. It's a market-led approach. The analysis done in a value chain integrated way. So there are some of the finer nuances and focus areas where we're moving in this integrated value chain principle. And we want to illustrate some of those to you. So the key question is effective implementation. So we have many plans. We have had the National Development Plan. The master plan is not a departure from the big goals that we have for the National Development Plan. The question is, can we implement? How can we effectively implement? And we're not going to implement by showing fingers. We're going to implement by doing. And we all have to do. And that's the key message. And it clearly comes out in the complexity that Tracy just presented. There's no way that just one stakeholder is going to be able to manage and handle that level of complexity in an industry. The agriculture food system's contribution to the economy in South Africa, I think this is a very important distinction that we need to make in the philosophy and in the approach, what agriculture's contribution can be, and how can we see and leverage agriculture. Look at this graph, and this is from our colleague James Thurlow at IFPRI. He generated this graph. I apologize for some smaller numbers, but let's just look at what this graph is telling us. The total agriculture food system, now that includes primary agriculture, traders, processors, food services. If we look at all of that, the total contribution to the economy is about 9.3% for that specific year. It was a little bit back in the years. I think this was a 2018 number, 2017, 2018 number. So numbers are changing. The definitions can be moving this side, that side. But if you just compare it across all the countries, South Africa is very much in line with developed countries. We are comparing to the US, to Europe. Next to us there, Brazil, Chile, France. That is primary's agriculture share of the total economy. Our neighbors, there's a different story in the rest of African countries. So where agriculture is playing a much higher role. So there we are 20, 30%, much higher contribution to the economy. So the question is, what can agriculture do in terms of our challenge in employment, and development, to reaching those developmental goals. And we see a huge opportunity to leapfrog this transformation, the structural transformation that many of our African countries still need to go through. And that is an opportunity on its own that we can talk about. I mean, it's a huge opportunity. But just imagine we've got these strong markets, we've got functioning markets, we've got private sector that's investing, we've got a good tax base, we've got strong institutions, and we still have a good infrastructure. So we're all on the back foot on infrastructure. I realize that. We need to do our maintenance. But if you travel, and we've done extensive work in Africa, or doing extensive work in Africa, South Africa still has a good infrastructure compared to the rest. Not according to Tracy's numbers there on the ports. So the ports we are struggling, but the reality is we have good institutions, we have big private sector investments, we've got a good tax base, and can we use that to leverage our development case? So just again, a little bit of a different pie chart to illustrate agriculture share. So yes, primary agriculture's got a small share of the economy, but this is not a bad thing. And we need to remember that. So the graph on the right-hand side shows agriculture's share of the total economy since 1960. And it's been declining. And it's not bad. It's as the economy is transforming. In real terms, agriculture growth has been growing very fast. And that's what we need. So we have a clear opportunity in agriculture to make a contribution. Yes, the bigger economy, we are small, but in terms of the multipliers, and that's what we want to get to. And this is where the first picture comes in. What I've shown you now is just the formal economy. This is the informal economy that we are not measuring. So how big is that informal economy? And this is where the reality really starts. This is where the multipliers start to play a big role. Now, this is just an illustration of work that we did for SAPO a few years back now, 2-3 years back, Johan. And this is just on pigs. The other industries, we can do the same. We can do the same analyses. The reality is, if you just look at those numbers, formal numbers, that is this 3% that I just reported on. That's the formal economy that we're measuring. There we're looking at 1.4 million ticks, 170 producers. Look at where those producers, they are concentrated in the Gauteng area and the Western Cape. Look on the right-hand side. That's the informal economy that we're not measuring. These producers are all there. They are households. There are 200,000 households in this space. They've got almost 900,000 pigs. And if we look at the multiplier effect, and we surveyed those little operations, 10 pigs, 20 pigs, if we look at their revenue, and if we compare that with jobs at minimum wages, we're getting to 23,000 jobs added in the informal sector. So colleagues, we're not measuring the informal economy and the multiplier effect that agriculture is actually playing, the role that agriculture is playing in the informal and especially in the rural markets. So look at the spatial map. Where are those little households? They are in the provinces or the areas where we actually have the highest incidence of poverty. So it's making a huge contribution, which we're actually not measuring. And those are the kind of multipliers, if we think back also of the National Development Plan, that we really need to take into consideration. Agriculture's employment share is almost double that of its GDP contribution. So if you look at agriculture's share of formal employment at 6%, GDP contribution 3%, so double. And if you look at where that biggest contribution lies in terms of jobs, it is in the fruit sector. Fruit and livestock, those are the big sectors employing most of our people. And that's why Tracy's points also, we've managed to grow this industry and absorb jobs in these industries. Now it's a question of maintaining those jobs and making sure that we don't lose them in the tough times. So careful planning, investment, and nurturing that industry. And this speaks to the labor market. So just looking at minimum wages, average increases in minimum wages over the last 20 years. If we just look, there were two periods. The first period up to 2012, that's where we had the big jump of almost 50% in minimum wages. Before that period, annual increases almost amounted to almost 11% per annum. And the wage increases after that 2012, 11.6. So wages have increased, and I'll show you in the next graph, despite of increasing wages, agriculture has maintained jobs and actually grown jobs. Okay, so that's a good story, because on the right-hand side is the worrying one for all of us. And that is the rapidly rising unemployment rate in the economy. But let's just look at the numbers. South Africa's population, 61 million. We have a labor force of 22 million, and 14 million are employed, of which agriculture employs 855,000. So we have, and I'll get to that household number just now. So we have unemployed people about 7.8, and we have discouraged people about 3.7 million. So if we look at the broader definition, we have an expanded unemployment rate of 45%, which is very concerning. And this starts to speak to two elements. And again, that's why we need this diversified strategy that takes these multipliers into consideration and speaks to the elements that we really need to address to unlock the value that agriculture has for the economy and for the country at large with its developmental goals. We have 2 million households in agriculture, and that was I just gave you the pig example. There's a red meat example as well, vegetable example as well. So can we measure, can we understand those industries and grow them? But the reality is agriculture won't solve the country's problem in terms of unemployment. So we can make a big contribution on a very sensitive area of the country. Socially, we can have a big impact, but we can't solve all of it. So this is just remaining with this labor market, because I think these are some of the key messages that sometimes either get distorted or not told. The first one is on the left-hand side. That is the bar chart where we add agro-processing jobs and primary agriculture jobs. So you can see from, let's say, over the last since 2008, we had this jump in 2015-16 with the survey numbers from Stats SA. But overall, we've basically maintained jobs through this increasing higher wages. I did put the NDP target there. And that's the high target of the three-tier strategy. And that target includes your 300,000 or almost 400,000 livelihoods that we could create in this underdeveloped or underutilized area of smallholder farmings and idle state land. But there's another picture on the right-hand side that we need to paint and tell. And that comes from the labor force survey from Statistics South Africa. Let's look at the softer issues. What is happening in terms of paid leave, UIF deductions, written contracts, and satisfaction with jobs? And there what we've done is compared agriculture to similar industries with the same level of unskilled labor. Okay? And there you can clearly see, so just compare your red line, those are hand packers, and the green line, those are farm workers. So in the space of paid leave, agriculture is a space that has increased the fastest in terms of paid leave for workers. It's a space that has increased the fastest in terms of UIF deductions. Space that has increased the fastest in terms of written contracts. So these are all social important aspects that agriculture is also addressing, not about only wages. It's also about the social well-being of our workers. And those are, thanks to the Statistics South Africa and the surveys that are run, those are all contributions to the social well-being of our nation that plays a big role. Food security, another key element. And again, I want to make a difference here between food prices and affordability, because there's a huge one. On the prices side, despite of our relatively high inflation rate currently, let's just benchmark that food inflation with other countries in the rest of the world. Our current food inflation rate officially is lower than the US, lower than the EU. It's only China on this graph that has a lower food inflation rate than South Africa. And other developing countries like Brazil, Kenya, Zambia, significantly higher food inflation. The problem is affordability. So I'm not saying that a food price increase from veggie oils of over 20% is not a problem. They are very high. So that's a reality. It's affecting all of us. What the real problem is for South Africa is we have 50% of our low-income households who cannot afford a basic food basket. So that's where the challenge lies. Now, what's interesting is if you have 2 workers employed at the minimum wage at farm level, they are above that 50% line. So that just gives you a feel in terms of the poverty line and also the contribution again, that it's important to maintain our jobs, to grow our jobs. The problem is affordability, and agriculture on its own cannot solve it, but we can make a concerted and a big effort in contributing towards this. So what's the road ahead? I want to get back to the NDP, and this time NDP through the ANP value chain approach. And I want to start to move in that direction. So it's the NDP, again, we had these 3 tiers, and we talked about value chains in broad terms. We set the multipliers in the agro-processing part. This graph, what we've done is just looked at the last 10 years saying growth and jobs. Where have we performed? And on the top right-hand side, high-value labor-intensive export crops, they have grown. We've expanded by almost 80,000 hectares of irrigation. Now, colleagues, if you put an average of around 800,000 to 1 million rand a hectare of investment in orchards, we're looking at between 70 to 80 billion rand investment in driving growth. So that's top right-hand corner, fast growth, jobs were supported. We have these informal sectors, the secondary informal sectors that we don't measure well. We don't know what's going on. We have a sector which we call emerging producers that have received support, structured report, comprehensive financing, extension services, and there are many pockets of success. We've put them also on the right-hand side of the growth graph. They've performed well. But lower on employment, on the jobs, because a lot of that success is still small. We need to grow that. We need to invest in that and understand that space. And that's where I want to move to the left-hand side. That's the smallholder subsistence producers. And the land reform and underutilized land, that's a space that it's been there for a number of years. And we don't understand it. So this is a very busy graph, but I want to talk you through it. So BFAP has recently launched what we refer to as a roadmap to inclusive agriculture transformation. And on the bottom left, you see many dots and many different colors. And that represents data currently in the industry and in government, various organizations. So there is data out there, but it's lying, it's all over the show, if I can call it that. It's not structured, it's not coordinated. And we have a lot of data dots. The objective is to start working together to collaborate on that data and start working on a roadmap where we can start to measure and to map what needs to be done in this industry to work towards inclusive growth. And there are many elements to it. On the bottom right-hand side, that busy little corner there, that is BFAP's monitoring and evaluation system. So we have, over the last 6-7 years, invested through the IVA system in an M&E system. We were working with industry, with citrus, hort grow, sugar, to help them think through data. What are we measuring? How are we reporting? In order to really understand impact, to benchmark it, and to make this a sustainable investment and a sustainable drive. And through that, then roll it up into an analytical system where we can start to inform policy and broader investments. And that's what this roadmap is all about, is saying how can we work together and understanding if policies are really impactful and driving the reforms that we need at ground level. So it's really the combination of that micro, the M&E, and it's rolling up. With the M&E, we are not going to, it's not possible to capture every smallholder farmer in the country. It's not possible. But through working together and combining the dots and putting it into an analytical system, we think that we can, over time, simulate these impacts and really get a better understanding of what the sector needs. And I want to show you some practical examples. This is just on sugar. We've done work in sugar with this M&E system. The map there just shows you the concentration of farmers where we've mapped these transformation farmers. We've actually mapped most of the farmers in this industry. Now that line is the area under sugarcane production. And many of you know sugar, the industry is under pressure, area's coming down. In the outlook period, that area is going to continue to come down. Under the master plan that sugar has worked on, there's a significant stabilization. So in that table there, you see no further decline if we can implement the master plan. Under the baseline, there's further decline in area, there's a further decline in jobs. But look at the third line. The third line presents a simulation of combination of health taxes, labeling, etc. And if we introduce that into our system, we're actually losing more hectares and more jobs. And if you look at the bottom right-hand corner, what's the impact? In which area will that policy hit the hardest? It will hit the hardest in the North Coast, where we have the biggest number of smallholder producers. So what the system does, it helps us to understand some of these impacts on reforms, on policies, and bring it to farm level. And to say, can we sit down and have an open debate around these policies and structure them in such a way, or build the support mechanisms in, that if we understand these policies, there's a clear reason, objective for them, but let's also look at the impacts and how we can build these sustainable goals. Not easy solutions, but certainly if you put it through an analytical framework, it can help. This brings us back to the optimal allocation of limited natural resources. And we all know the story of South Africa. We are farming in a semi-desert part of the world to a large extent. We have extensive grazing in the biggest share of our agriculture, land potential. And what we have, we need to drive and look after very carefully. And our DGs talked about climate and the change in climate, and this is the reality that we're sitting with. So looking after our environment and to mitigate and to adapt. And those are big words, but there's certainly something that can be done. So the first one that is just this clear winner, it still remains there, is to unlock underutilized state land. And this is where the ARC has done wonderful work. We've also used that in the master plan. They've mapped the 1.8 million hectares out of the total of state land, what's that, 4.8. And we've used that data, and we know where those farms are, and simulated that in a master plan scenario, saying if we can get these farms back into production, you can create those markets. But on the top right-hand side, those yields need to be commercial yields. We need to drive them to commercial yield levels so that they can access global markets, that they can have competitive maize prices going into the feed industry to create that multiplier effect. So it remains, and colleagues, this is how we've worked together from NAMC side, CRED side, our modeling side, to get to a solution. And that's why we say this is a market-orientated solution, because it takes various elements into consideration. Capital is a big one. And this graph just gives you a broad spectrum of how wide the range of capital investments are. All the way on the right-hand side, orchards, there we're looking at capital investment of over R1 million a hectare. On the left-hand side, we have less than R150 a hectare. Those are the extremes. Now the two pictures, and some of you have seen these two pictures, I took those in the Northern Cape. And I was literally sitting on a road on the left-hand side, top picture on the right-hand side, orchards, table grapes. the difference between those two is 150 rand a hectare and R1 million a hectare. So what unlocks that capital is a certain policy environment, it's the finance, it's the extent, and in the space of inclusive growth and bringing in new farmers, we need extended terms and development finance, and that's a big word, and we can have a great discussion on that in the panel discussion. So these investments need the finance, and it can't be just one party investing, or only government or private sector. It needs a combined effort to do this. And this brings me just to our debt levels. Debt levels have been rising, and that's this blue bar on the left-hand side. Those are nominal terms. But the middle graph gives us an interesting perspective. What we've done there, we've divided debt by the turnover of the industry. Now, for those of you in the banking sector, this is our rule of thumb for repayment ability. So we're just broadly saying if you are a mixed farmer, livestock crops, you don't want to go that ratio to float much over one-on-one. So your total debt must not exceed your total revenue by much more than one-on-one. That ratio has come down significantly. It was at its bottom around about 2009, 10, and then it started increasing again. We're currently sitting at about 0.6. So you can imagine that 70, 80 billion rand of investment in orchards was in this last 10 years. Okay, so that's all sitting in this debt to output ratio, basically, debt to gross farm income ratio. The question is going forward, what does this ratio will look like? Because the secret of this ratio, also part of it, lies on the left-hand side. Can you see interest rates coming down? If those interest rates are increasing, this is going to put pressure on it. So at a high level, agriculture still is in a relative good terms in terms of repayment ability and investment, ready for more investments. But we need to nurture this environment and look out also obviously for the increasing interest rates. This is on commercial terms. We want to bring new farmers into this game, and they're exposed to this type of environment. And that's what's really all of our challenges that we need to work on. So this is a very busy picture. I'm not going to overwhelm you with this, but this speaks to the development finance part, and this speaks to the AMP value chain approach. So I see many smiles here because we've done this graph many times. But I want you to just point out what the principle of this is. AMP is a value chain approach. And that implies all the stakeholders in the room and online need to work together. And that not only involves the analytics that we're producing, it involves a dialogue. It implies the practical implication of that somebody in the market on the right-hand side needs to be able to pick up a phone and talk to somebody all the way on the left-hand side and have an open discussion. And saying whatever's happening there is having an impact on my side here, or I can do something for you on this side which can pull us all the way through the value chain. So this is just for red meat. If on the right-hand side, if we don't have our SPS commitments in place, our DG talked about it, we're not going to drive exports. We're not going to get the opportunity to access more markets. It will be far too risky for local abattoirs and export companies to invest in exports. And what will happen is if we go all the way to the left, we won't get that additional pull of carcasses and productivity gains that we have in smallholders and new entrants in the market. So we have a lower productivity rate. So it doesn't help to focus only on the productivity rates and if you don't have the market, and vice versa. It doesn't help to focus on the market if you don't have the productivity rate. So having the inclusive value chain discussions is a principle, and you'll see blue and red buttons because it's private sector and government that have very specific interventions that need to be looked at. But overarching on all of this is having the dialogue that needs to take place. I probably have to speed up a little bit. So the infrastructure, we've talked about this. The point that I wanted to make here is what is agriculture's real opportunity for import replacement and where we have opportunity for export growth. if we want to replace more soybean meal in the soy value chain, we will have to look at transportation costs at the coast, towards the coast. That's the short answer. In the northern part of the country, we have now exceeded 2 million tons of production. We're basically self-sufficient in the northern part, and we need to transport down. Now, currently, we are managing that, but it needs to have a good quality, and it needs to be cost-effective to land that meal in the coastal markets. So the question is, how much more growth is there? It depends now on other factors. And the reality is that soybeans now will have to compete at export parity. So yields that we're looking at now, it's kind of hidden behind higher prices. But prices, if they're going to come down, we're going to rely on productivity all the time to grow the sector. Our DG has talked about the Africa Continental Free Trade Agreement. There we go. And again, just highlighting the differences. Look on the left-hand side. That's South Africa's trade bill. And those different colors, on the top of the bar, what are we exporting? Unprocessed perishable, low processed, and high processed perishable. But look at how much more are we exporting than importing. Colleagues, this remains a good story. We are net exporting agriculture sector and agro-processing. Okay? What are we importing underneath the line? There are these 4 sticky products: palm oil, wheat, rice, chicken. Those are the big 4. Those are the big 4 products. Some of them we can do something on it. Isaac, we're working on that chicken imports to bring those down, and Tracy has worked on that, and on the analytics around it. Wheat, many discussions around wheat, but the reality is we're not going to expand production again in the Free State. Yes, we have a blip now, but if the risk is too high to grow wheat in the Free State, we're not going to do it. We've got soybeans there, we've got maize there. You've got cattle. There's areas that were under the old marketing system that were supported. We're not going to grow wheat there anymore. We can grow our sustainability of wheat, definitely. Palm oil, we certainly have an opportunity with growing soybeans, sunflower, canola. We can eat into that palm oil market, but it's also a market, once everything settles down, palm oil is extremely competitive on pricing and has a very specific market in the oils, in the veggie oil market, which is also to a limit. So I think we need to be realistic, assess every value chain, and the master plan also did that. And then also look on the right-hand side and say, how do we trade with our continental partners? In other words, building those chains and saying, where's the opportunity? Yes, there will have to be some give and take in the continental free trade agreements, but certainly just look at the amount of processed product that's coming into the African continent. Completely different strategy than in South Africa. Almost at the end, we are not the only ones who are competing in this market. Just quickly eyeball Peru's expansion in high-value crops. And that was the last 5 years. Citrus, 12,000 hectares. Avo, 17,000 hectares. Grape, 8,000 hectares. Blueberries, 12,000 hectares. I think we did just over 2,000 hectares. So these markets are big, and they are there, and they are competing in the space where we are competing. And that has to remain high on our agenda in terms of how do we, and Tracy talked about market access. This is work that BFAP's been doing for the last 10, 12 years. And again, a busy graph, but I just wanted to illustrate one principle to you on those lines. This is the Agri-Benchmark initiative where we're comparing cost of production per kilogram or per ton of maize with other countries in the world, the big exporters, the US, Ukraine, Russia, Brazil, Argentina. Now just look at the averages from 2017 to 2021. On the left-hand side, we still have lower yields, despite of good yields in the last few years. On absolute terms, our yields per hectare are still lower than the world, those major exporters. But look on the right-hand side. Can you see the cost of production? So in essence, what this graph is telling us that per ton of maize produced, South Africa is very much in line with the US. We are still more expensive than Argentina and Brazil per ton of maize produced. But what this graph is telling us that we are in higher, if we have higher yields in good years, we are cost competitive, even if we have relative terms lower yields. So this tells a story about overall productivity, and Tracy made the point about staying on that productivity curve. We need to ensure that. So those are elements like your technology levy, investing in new seed, but also investing in integrated value chains of input supplies. So fertilizer costs, and we don't have to dissect this in detail, fertilizer costs are some of the elements that make us uncompetitive or that put us on the back foot. And I know there are many initiatives currently ongoing to sort that out. Lastly, but not least, if the battery holds, here we go. We wanted to also show you this. This is BFAP's DIFM, Data Intensive Farm Consortium. And what we're doing in this space, and this really speaks to our next generation of farming and how do we going to mitigate and manage the climate risks and optimizing the scarce resources that we have. And that will have to come through data science, it will have to come through precision agriculture, and a big investment in that space to manage finer, to manage our resources in a more sustainable way. And what this data does, this is just one example. So what we have here is we've been tracking, we have 12 farms that we are working with where they have precision farming equipment. And whereas normally, for example, on a seeding rate, you would do 10 observations and you repeat a trial 10 times and try to understand what's the ideal seeding rate. With this technology, this is a 57 hectare plot, if I remember correctly. So on 57 hectares, we have 1,600 observations that we can repeatedly measure, and we can really get the optimal seeding rate. So, and these are small increments. Sometimes it's currently the farmer's doing 300,000. The optimal could be 400 or 421. And we've had now farmers who's been starting to follow these recipes and increasing their profitability. So it's all about optimizing that last bit of your input. And that's how you survive this new environment and the baseline that we've been presenting. I want to conclude. So just coming back, how do we change the narrative, or how do we change the outcome of the baseline that we've presented? It's all about those factors. We're starting with what the DG presented. Tracy presented those. The markets, the global uncertainty, the climate, they will always be with us. It's how do we manage that? And how do we work with one another in a value chain and have that dialogue and build the analytics into this dialogue in order to inform decisions and also to shape our policies and our reforms. So colleagues, thank you very much for listening. This has been a long session. So we're going to stretch legs for 15 minutes. There will be, I think, a short video on BFAP, what we do and who we are. And then we'll come back for a great panel discussion led by Wandile Sihlobo from AgBiz. So thank you very much.
The agricultural sector is bookended by the producer and the consumer. And in between these two lies a complex network of value chains, where markets, competitiveness, processing, the environment, and policy play a major role in sustainability. The Bureau for Food and Agricultural Policy, BFAP, serves the agro-food, fiber and beverage sectors in South Africa and the rest of Africa through public sector, private sector and international development and donor-funded research. BFAP's purpose is to inform better decision-making by providing unique insights gained through rigorous analyses, integration and overlaying of existing and newly sourced data to identify and support implementable solutions. These analyses are supported by credible data and a combination of integrated models and considerable industry experience. Since 2004, the team has continuously developed this distinct value proposition. This offering is complemented through BFAP's investment in the Integrated Value Information System, IVIS, a geospatially focused software service provider, which further enhances BFAP's product offering by providing enhanced system solutions to the collection, management, and integration of data, as well as visualization of insights to support strategic decision-making along multi-dimensional value chains. BFAP uses globally recognized techniques and modeling systems and currently covers more than 50 commodity value chains in a range of sub-Saharan African countries. The BFAP Group consists of a team of experienced professionals with a range of multidisciplinary skills, including agricultural economics, food science, mathematics and data science, engineering, supply chain management, socio-economic impact assessment, systems technology, and geoinformatics. BFAP fundamentally believes that a competitive and thriving agricultural sector with its related value chains is built on long-run partnerships. As a team and as a network, BFAP pools knowledge and experience to offer the best possible insights to our growing local and international client base. Capacity building and training of the next generation of researchers and analysts and the promotion of multidisciplinary research remains one of BFAP's focus areas. BFAP partners with a number of universities, in-country think tanks and networks in development of course curriculums, teaching of short courses, hands-on training in modeling and market-led analytics, and support of postgraduate studies. In its role as a local think tank, BFAP annually publishes the highly anticipated Baseline Report, which presents a 10-year outlook. It considers the performance of South African agriculture and agro-processing and their contribution to inclusive growth and economic prosperity in the South African economy. In addition, its integrated analytical framework has been applied in a number of critical research projects supporting the agricultural sector, such as the National Development Plan and the development of South Africa's Agriculture and Agro-Processing Master Plan. BFAP's passion is to generate insights that facilitate informed decision-making and growth in the agricultural, agro-processing and food sectors across Africa to reach their full potential and ultimately contribute to inclusive economic growth, food security and poverty reduction on the continent. BFAP, providing data-driven insight to facilitate growth.
Business Chamber of South Africa, AgBiz. We now on the discussion side, after what was the interesting discussion on commodities and on policy. You've heard Tracy, you've heard Freddie. Now we have an opportunity to actually interact with some of the esteemed panelists. Next to me, we have, as he was introduced, our DG, Ramasodi, and Johan Kutse. Many people online and in their room probably know him, CEO from SAPO, the Pork Producers Association. Next to Johan is the chair of the Land Bank, Ms. Tabingosi, and of course our very own at BFAP, Gerard, who does amazing work on the livestock space. So to all of the colleagues that are online, if you could please send your questions through. We have a system where we'll be able to bring those into the discussion that we are having here on stage. Now, DG, having listened to all of what Freddie had painted out and what Tracy had painted out, I think I want to pick on from the slide which showed that we have prospects and possibilities of going up. But of course, if we're not changing anything, we could remain on a somewhat slow down direction. And as we look into South Africa, and I think many people also that are online will agree with the fact that we face numerous challenges. We have challenges on the inefficiencies and regulation, Act 36 and many things that people talk about. We have challenges on infrastructure, which is cross-cutting and outside your department. And I want to start from you to say, how do you frame that and what's your thinking from the department to say, working with all of the stakeholders and leading into that red line that Freddie was putting in place, because that's where we see jobs and good prospects.
No, thank you very much, Augustlo. And let me also welcome the presentations that we took this afternoon and the opportunities that they actually outline for the South African agricultural sector. And maybe where we need to start off is the good work that we have been doing with BFAP, and maybe part of the solutions that we have for the red line achievement that you are talking about lies in the agriculture and agro-processing master plan, where there is a clear determination on 6 critical issues that we need to deal with, dealing with the issues around policy ambiguity that we are having, and that would relate to the issues that we have just indicated around Act 36, as you say, dealing with the ports efficiencies, maybe not only port efficiencies, but effectiveness and also port resilience, because in terms of the discussions that we have had this afternoon was what happens after the disruptions that we have at the ports. We also need to create an enabling infrastructure, both on and off farm, in terms of us achieving the dizzy heights that have been painted for today. I think there's also a need for us to improve our production. And I think if you listen to the stats around poultry production, they left me with a stark reality that if we don't deal with the issue around localizing some of the food systems that we are having, we run the risk of not growing the sectors that we are having. And that's very important for me as one of the things that we have got to look at. I think there's also a huge potential in terms of this sector of ensuring that we deal with the constraints that we have around for instance, R&D around biosecurity as we know it to be. Maybe later on as we discuss, we will get to the points around biosecurity. But it's very important that there is a very thin line between your production and trade. And in that lies the balance that we need to strike, that as you produce food that is safe and can be traded safely all across the world. And that's where we need to get to. And the last issue that I thought that will jolt us towards that red line were the issues that were discussed towards how do we deal with big data analytics at this moment, with all data that is lying almost everywhere, that really impedes our ability as a country just to construct a policy inference in terms of the data that we are having, is something that we can work on. And therefore, there is quite a lot of areas where we can work together in partnership towards ensuring that we move this into a very good trajectory where we have got growth in our sector. Thank you.
No, absolutely, TJ. And you're mentioning a lot of things about working together, possibilities, and I want to throw that to Gerard, because he's been working with all of the colleagues in the value chain in the red meat industry. which in the past we wouldn't typically see them sitting in one table. That means that there's trust that needs to be built, there's accountability that needs to be built. And now, Gerald, if you have any learnings from there that you think they might be useful to actually building up on these points and giving us that Tracy and Ferdy's dotted upward trajectory.
Yeah, absolutely, Wandile, and thank you, DG, for pointing that out. I mean, trust builds on relationships, and as Ferdy also mentioned, the constant dialogue. And we can complement the red meat primary cluster from BFAP side, taking a very bold leap in saying that, something has to change. Status quo is not acceptable. And in order to bring that change, you need a vision. And essentially that vision, the starting point being the NDP, understanding that there's clear policy, there's a clear framework that starts with the NDP. And out of that grew the master plan to say, this is a roadmap. This is where industry, private sector, and government comes together and have this dialogue, as Ferdy indicated. But out of that, that's where the real hard work started, where the industry had to come together to say, what's our own vision? And with the support from each node in the value chain, we facilitated that process of building out the strategy, being very clear, what does the industry want to achieve in the year 2030, which ties to the NDP goals. Creating that cohesion was probably the most difficult task. And that, again, is built on constant dialogue. And in that specific case, the empirical side, the side where you can't debate the facts, that was really, I think, part of the dialogue that kept everybody on that common vision. And in the end, out of that, the industry is saying that, well, we don't just want a strategy. We want something that's implementable. And that out of that grew the Red Meat Industry Services company, which in essence is tying to the slide that Ferdy showed about effective implementation, because we've had many plans, many strategies, but it's very clear from industry side and from government side that somebody needs to do the work. Somebody needs to be at grassroots level, the way that Matlo also pictured at the start of the baseline launch. And I think that's the most important bit, is the grassroots implementation. So you have a clear strategy, you have a clear vision, but you have a vehicle that is geared towards implementation. So that's where the red meat industry is currently at.
No, absolutely. And I like that point, because it talks about accountability, talks about common vision. And I want to bring that also, before I get to financing, to JFK. Because Ferdy showed a nice slide of the pig industry, where we have relatively small scale, but which we haven't measured quite well, and there are possibilities for growth. And then we have another part of the pork industry, which is already commercial and is doing relatively well. Now, the question to you, JFK, is about how do we tie all of those value chain at some point together? What are some of the key building blocks that you think are useful for building up that pork production and even commercializing those that aspire to do so?
I don't think it's an easy way in dealing with it, and maybe in focusing into it is I don't think we understand this informal world to a certain extent. What we've learned out of the concept that we've dealt with in understanding that a little bit better through what BFAP did for us was, it was to a certain extent an eye-opener, because we never knew this. We assumed a few things, but we could never lay our hands on data, the bigger data, to feed us into a system that say, listen, how do you then finance an industry like that? So my first point would be, I think, dialogue in the sense of understanding where you want to go to, and also understanding what the current situation is. I think the dualistic kind of concept that we deal with in South Africa, specifically the financing side thereof, the commercial side is well known, but the informal side is not that well known. And one of the reasons why the formal financing is not moving into that informal side is because we can call it trust, it's about risk. And you can't mitigate risk because of the unknown and of the uncertainty that you deal with in this informal side. That doesn't mean there's no potential. And that's the misleading factor. The fact that it's a bit of an unknown, and the concept what they deal with is different than what you do in the formal sector, doesn't mean it's not financeable. But because we can't mitigate our risk, and we can't, to a certain extent, take this risk and convert it into a program where you say, but I will be able to withstand say, a risky situation like what we are in now, then you won't participate in that. So I would say what we've learned out of the concept of BFAP in venturing into the informal sector for us is this wow factor that we didn't know. And immediately it opened up a mindset concept. We can change our mindset, and strategically we could apply to what needed to be applied in that specific area.
Absolutely, JFK. And I think to all of the colleagues really that are on the line here, the core of what JFK is getting to is also ties up to the importance of what BFAP is doing on saying how do we go to communities, extract data that make us understand the environment. Then the likes of DG and the other financiers thereafter can have some solid information to make a decision on. And I think this study brings us to you. Freddie made a lot of mention during the presentation that we need finance, not only finance, developmental finance. You are currently chairing the Land Bank. You've had your difficulties as what we read in the media. But I want to come to you about how are you thinking about the developmental space, and how is the Land Bank as it rebuilds, pretty much thinking about the model of funding, particularly that new cohort of farmers that could give us long-term growth?
Yeah, thanks, Wandile. And before I get to that, perhaps let me congratulate the BFAP team for another successful baseline launch. I think this, what Professor Meyer was taking us through is really a call to action around how it is that we can change the trajectory that we're seeing currently and really take it up to that red line. And I agree that finance is very, very important, and the crafting of appropriate financial solutions is something that we need to focus on. I also agree that that developmental cohort is what is going to take us to the next level. And when you speak to developing farmers, the one thing that they will always lament is lack of access to finance. The lack of finance is one of the biggest issues that emerging farmers and developing farmers talk about year in, year out. And as financiers, we've sat in sessions and we've listened to these farmers and said, absolutely, we hear you, but we really haven't put our money where our mouths are, right? We still don't see funding flowing to that cohort of farmers. And the question we need to ask ourselves is why, and who needs to do it, right? So as the Land Bank, I think it is no secret that for the past few years, we have largely been playing in the commercial space. Despite the fact that we are a development financier, we ourselves have not been participating in the way that we need to in the development finance space. And now, in looking at where we are as the bank, we're saying we want to change that. We want to take the risks that commercial financiers aren't necessarily willing or able to take in the developmental space. We've really started to look at our funding model, started to get ourselves a lot closer to where agricultural policy is going. We've had a lot of engagements with Ntate Ramasodi and his department, with them really cracking the whip and really aligning us and giving us the directive to really say, this is where the agriculture and agro-processing master plan is going. This is where the Land Bank needs to feed in as a state financier, and you need to align to that. And that is something that really requires us to rethink our entire finance model and our entire positioning in the market. And that is what we'll really be seeing from us in the coming months, because that is a space that only a Land Bank can play in.
Absolutely. Thanks, Danny. Those are important points. And I want to tie them up with the DG. Is he cracking the whip, or is he also giving you the money?
It's a bit of both.
It's a bit of both. DG, talk to us about all of the blended finance, because if the Land Bank is coming there, is looking at that development, you have all of our colleagues, for example, our sponsors today, ABSA, and the other commercial institutions that are also thinking about blended finance instrument in general. Going forward, how are you thinking and picturing that, particularly channeled towards this cohort of farmers that have the possibility to grow us while not ignoring the commercial constraint?
I think Wakankosi has put it very good in terms of where we are going as government. You would recall that Minister had relaunched the blended finance in March of 2020 to just rephrase and retrace where we need to go. I think the Land Bank as a product of statute has got a role to play, the developmental role to play, and the current board, in terms of where they are going, they are taking the right direction to also redirect how the land bank works. But in terms of blended finance, you will recall that we launched the Agri-Industrial Fund in partnership with the IDC as part of this blended finance, where we're currently sitting with a 1 billion rand funding that is available for agriculture. We are expanding the very same program with the banks, and the discussions are taking a little bit longer, I know, from our side, but part of it is just ensuring that we have got a very good quantum to start. We don't start very low, but we are able to then ensure that we balance and ensure that this sector is adequately funded for us to maintain or even succeed in terms of the various areas where we are growing. I think we are slowly but surely moving away from a grant funding exercise that government was at. We're looking also at soft financing that we can get our farmers into, so that we can be able then to use money sparingly wherever we can as government, because part of the challenges that we are experiencing is that we never seem to be having a graduation program into the next level where we can have our farmers being commercial. And once we get to that particular level, we can be able then to blend and be able to take the 800 and so thousand pigs that are already in the hands of black people and make them commercial. I think that's something that I learned from today and would like to challenge maybe the pig industry. How do we then move that ahead? Because it's almost a third of the pigs that we have in the country, and therefore huge potential that we have. And I think blended financing and ensuring that we understand the needs of those who want finance from us will be a great thing, because most of the time what we do, as Tabi has already said, we seem to think what the farmers need would be a grant, while the farmer is only needing a push and a soft loan to be able to progress. Thank you.
No, DG, I would fully agree with that point. I've heard people irritated with me saying we cannot be emerging forever. Mr. De Villiers knows some of those in Grain SA when they were doing amazing work in the grain space. People saying we want to progress to get to the next stage. Gerard, there was a lot of infrastructure issues that Ferdy talked about. He said infrastructure is concentrated in the northern parts of the country. When you think about it, broadly the livestock, and to an extent also even in a horticulture space, what conversation are you hearing about the infrastructure targeted? And maybe you can even speak to the industry that you have done recently some good work on.
Yeah, I think, again, a key component, we mentioned a couple of times that there's great opportunity, but there are these constraining factors, and one of them being infrastructure. So, for instance, the discussion on the concession lines with rail, for instance, how do you get action going from Transnet and industry, the big co-ops, investing in those concessions, managing it. And I think for a long time, public-private partnerships have been a discussion point, but I think it's becoming clearer that it's moving beyond the discussion point and going into action. And I think at some point, industry will be at the lead of that discussion, bringing, again, the structure required, the cohesion required, and on the other side, government being the enabling partner will have to sign off certain things and say that, we'll actually have to hand over some of the control of this line or of this state parastatal in order to get action. And I think the biggest part of the discussion today in the baseline was, in order to bend that curve, there's going to have to be a give and take, a constant give and take. And that is something we've seen in the livestock industry, being quite evident that at certain points, whether it's the veterinary department or whether it's the public health department saying that, there are certain things that we from a logistical point of view can't manage. It's beyond our control. We actually need full support from industry, and that's starting to happen. So I think in the export side of the industry, that's a real concern. We've done some great work with the ports authorities, Candace and her team. And again, it's in partnership with government. It's not in isolation. So government being fully aware of the constraints, but also going back to industry, to the wine industry, to the table grape industry, to the citrus industry, and saying, what point in time of the year is your biggest constraint, the biggest bottleneck, and how can we collectively manage that? Something that in the past was a very difficult conversation, but now it's opening up. So, and I think that's part of bending that curve, right? So working collectively and doing it.
No, absolutely accurate. As Freddie was making the point that our agricultural sector is looking almost like a developed world. We have all of these volumes of exports that need to go up. I'm monitoring even comments online here, and just before I move to Tabi, Datera Masodi, there are people here which are saying, I think it's our friends at Stellenbosch University, that blended finance should be at the Land Bank, not at the IDC. Those are notes for you. Absolutely, absolutely. Jim.
So we spoke about the BFAP survey that they did for us in the informal sector.
Yes.
900,000 pigs. If you talk to them and you talk infrastructure, it's a total different talk than what Gerard just said.
Yes.
So infrastructure to them is, let's go to the outbreak we had in Umfuleni. Infrastructure was waste management. Just a place to, if you have a mortality, where do I dispose? So that's what we need to go back to. If we talk infrastructure, we need to make sure that we have a very wide talk on all the industries, on different levels of what is needed in infrastructure.
You're raising an important point there, JFK, because I think we should guard against the point where we will think of infrastructure only as that which facilitates logistics. In areas where I come from, for example, in the Eastern Cape, the dipping system no longer works. Those are some of the things that we need to be looking at. But Tabi, you talk about you're ready to get into development. He might give you more money. But what areas of agriculture are you really going to be focusing on in terms of the subsectors? Are you really going to be shifting the focus and looking to those that are high value, or are you as a bank just looking broadly? Just talk us through that process and your thinking.
Yeah, so Wandile, we are still focusing broadly. There are no sectors that the Land Bank is going to, to stop funding. But what we do want is really to reposition our portfolio for impact. So we are quite deliberately looking to source transactions that are aligned with the master plan and looking for transactions that are aligned to high value, high labor intensive subsectors, because we think that those are really the areas where we can make the greatest difference. But also, these are the areas where we've seen the least transformation and participation of emerging farmers. If you look, for instance, in the permanent crop sectors where it is where you have high capital intensity, high establishment costs, high lead times to any kind of cash flow, that is where we've seen the sector lagging behind from a transformation and development point of view, and that's where we want to play. So we certainly are going to continue to play broadly, but we really, really do want to focus and really have a bias towards high impact so that we can really, I think, make our rands go a lot further and really align and bring impetus to the objectives of the master plan.
No, absolutely. I think that gives us to that Prof. Mohamed Karan's point where he was talking about the jobs, horticulture and all of that space, and what Freddie was showing about the required capital to get into that space. But I also was asking that point intentionally to you because I was reading on the Lambo Vietplat some of the other professors, I think it's from Free State, saying Land Bank is funding only developing farmers. But when one looks at the data, I think the Land Bank is having 10% or so in developing farmers. So I'm looking at the camera so that that point, even our viewers online, can have appreciation of. Let me move to you, JFK, because I'm also receiving some questions online here. People are asking, do you think there is a greater appreciation about how livestock, the role the livestock sector plays on food security? That's the question we are receiving online.
Yeah, so when we had ASF outbreaks, I think the wow call for us was also, firstly, where they market their pigs. So it's totally informal. A lot of it does not go through the formal abattoirs. It's slaughtered on premises and it's sold. So the first thing that we kind of bumped into when we had outbreaks and we started slaughtering out, and there was a program with government where we assisted, was the major role they play in local communities, specifically peripheral areas around bigger townships, in the food safety, food security. and how much meat goes into that little sector. So I don't think we understand the impact of the informal. I don't think there's no GDP on what the informal does in South Africa. Yeah. So to a certain extent that's neglected, and for many reasons. I don't think it's maliciously neglected, but it's so difficult to gather that. And what we've seen practically when we move into a space where you have a little rural community, immediately you discover the impact of that food system, that production system, on that rural community. The complexity for me in the food system is not just the food. The moment you take the pigs out of it, you've spoken into a complexity that we've never seen before. So you can feed good biological waste to pigs. So if you have a factory with a byproduct, that byproduct can go into a piggery. If you take it out, immediately there's a complexity that you need to kind of manage. And what we've seen in the informal sector, that complexity is to a certain extent unknown to us. Yeah. And the magnitude of that complexity is unknown. So if you pick one little thread out, all of a sudden there's movement on other places where you've never seen it before. Yeah. So the impact in my mind is to a certain extent uncalculated.
Yeah. No, JFK, I like the points that you are making. And I want to make this because we have also our colleagues from government, Dr. Boyketo are here, and the DG next to me. Because in South African government, we hear a lot about this thing of township economy. So some of us who are coming from villages, we wonder, have you forgotten us? You talk a lot about township economies. So the understanding of what happens in the rural economy, and that's the role where I think BFAP can play an important role there. And I think even our statistic agency, I mean, I sit at the board of Stats SA, we don't have deeper understanding of that point. And I think those are areas we should be funding a lot. But DG, I won't let you go here because some of your bosses, the president, have been talking about land reform agency and all of those things. And I think when we think about that cohort of the farmers that Tabi can fund, Gerard is talking about, JFK is talking about, some of the issue around about land. What are you thinking? What is this agency? How is it going to help us? Is it another SOE? What is it?
No, thank you very much. Before I go there, your friends from Stellenbosch would think that I'm avoiding their question. When we had an arrangement with the IDC, I have got to declare so that the chair departs from this engagement, knowing that at that stage, the land bank was in ICU. Yes. And there had to be a way that we had to deal with the issues, and therefore the space is open for an engagement with the chair. On the issue around land reform, I think there are a few critical aspects that we are looking at on the value chain of land reform per se. It's how do we define and use the land that we find ourselves being restituted to communities. Yes. In the presentations that we have had now, there was an indication that there is a lot of land that is lying in communal areas that is currently lying fallow and can be utilized towards achieving this objective. So that's number one. The second one is around with our rapid redistribution of land and how we then identify these farmers who are already farming in different areas. And I like it in the urban areas you have got commonages. How do you decongest the commonages and ensure that they have got areas where they can farm or pieces of land where they can farm and move into small holdings where they can do farming or even into commercial areas of our time. And part of the discussions that we are having, especially on the urban edges or even in the farming communities, you have got your farm laborers, you have got people who have got tenure rights in terms of farms and have got a small piece of land where they are practicing agriculture. Those are the areas of potential growth that we need to be identifying. So to answer your question in a long way, I think there is a lot of potential in terms of land reform. There are issues that would be raised around how do we ensure that that happens. There is also a lot of goodwill that comes from the commercial sector in terms of the land donations policy where we are also exploring of how do we then decongest and also settle our farmers into areas where they can successfully do some farming.
No, DJ, you hit the nail on a head onto that, because I think all of those, there is even a vehicle, if I understand the regulations well, it could be a land bank or wherever, where there could be a land reform fund where interesting things can be done in the organization. JFK, you were part of the master plan stuff, and one of the core things now is about the implementation route. And I'm seeing the questions that are coming up in the chat here. People are worried a lot about, we have the framework about how things can work, but how do we usher and ensure that everyone buys in and takes their responsibility in implementation part? And perhaps after JFK, you can even anchor that route, Gerard, having done work that is looking at 2030. JFK.
So I think one concept that we set to ourselves when we did the AMP plan, or we were part of it, is we need to define roles and responsibilities. And I think as an industry, the first thing we said is we're taking up a responsibility in South Africa to play part in specifically the AMP plan. The implementation thereof in our world is not an expectation to Mr. Ramsodi. It's us as big farmers. We need to implement the new phase that we see and where we're going to go to. So my take on the AMP plan is, I think it's a brilliant concept that shows us the potential in South Africa. There's some good vehicles inside that to be able to do it, but it starts with us. And everybody needs to take up responsibility. I think we had a question at ACBIS at their conference, and the lady asked us a question on, now who should start with this? Should we not implement and appoint people to start it? And I said to her, ma'am, you know what, I have a board of directors. We did start it. And my take is just the impact of what is going to happen here is for us as industries, but it's not just us as industries.
Yes.
And that's what the plan is showing us. It's complex, and the complexity needs to be managed, but it starts with what is my responsibility, and then we take up the responsibility of being implementer of that specific plan. I think one thing that we did say with the plan, which is vital to say again, is it's a function of an economy.
Yes.
And we need to enable an environment where we create this economy, where people want to participate, where people do participate, and then you don't need to drive people. Then people venture into the opportunity that you create into that. So it's an enablement to a certain extent for people to participate and say, I take up the responsibility that I see, that I have as an agricultural player in South Africa.
No, JFK, you're making important points there. And I'm again looking in the camera because we read the news, some of us who are also moonlighting as journalists. And there were people who were saying the master plan is a disaster, is not useful. But I still think that it moves us a step forward. It's better than not having anything to move us forward. And I think your point, JFK, hits onto that.
Wandile, we can make it a disaster. It's our choice.
Yes.
Or we can make it a success.
Yes.
And that's your question.
And that's, we should choose the latter.
That's it. So, and by choice, we said as industries, as the red meat industry, we said, by choice, we're going to make this thing work.
Yes.
That's not, and why? Because we have the willpower to say where we're going to be in 5 years from now. Yes. So if we look at the plan, I can shoot holes into it.
Yes.
But then also when I look at the plan, I can say I can make this work.
Yes.
As an industry, as greater industries in where we play, we took a decision by saying we part and parcel of creating something more sustainable for South Africa in our space.
Thanks for that, JFK. And I think we were talking, in fact, offline with Mr. Yanni de Villiers about the next phase of implementation, and some of our colleagues like Dr. John Purchase and others are online, so that's an important step to that we will all be thinking about, DG, with your leadership there. Gerard, to your point, the story of trade came up a lot. Freddie emphasized the fruit space, but in the beef industry, livestock industry, there's a lot that is happening there. We've seen last year, for example, I think record exports of beef, just around about 60,000 tons that went out. Talk to us about the strategy when you're thinking about trade and what you were observing in conversation with the industry.
I mean, a key component tying to the master plan is trade. So essentially, if you reach a certain threshold, your industry needs to restructure and refocus, right? So in the red meat industry, part of the narrative and the vision coming from the master plan is growing exports, for instance, from 5% of production to 20% of production. I mean, to put that into practical terms, it would require the abattoir industry to slaughter per month at the same intensity as what they slaughter typically through December and January. So you can imagine what the implication is of growing at such a pace. But that's the opportunity, right? So there's great opportunity, and without that, we see stagnation in the market. So Tracy and myself had the conversation this morning. You know, at what, again, this threshold level in the local market, we have a lot of pressure on the consumer side, disposable income. We have affordability issue, as Ferdy also mentioned, which means that we need to get rid of the excess. And a key component of that is the public health side as well. In other words, it's not just getting rid of everything. We need to consider what's the implications throughout the entire value chain. I think also just to tie into the risk comment that Johan mentioned, and even on Tabi's side with the land bank, the whole concept about, you know, how do you measure things that you can't, or how can you manage things that you don't measure? I think that with regards to the transformation and inclusive growth, that's really one component where that slide that Ferdy showed about the progression, about measuring this, you know, in the end, if we're not constantly tracking it, the economy is changing on a weekly, monthly, daily basis, which means that we have a strategy, we have a plan, but that's a live document. It's something that needs, again, constant dialogue. It needs to engage with government. It needs to engage with the industry. Because, for instance, we're currently not trading. We're not exporting. You know, what's the implications back into the local economy? What's the implication back to at least 40% of the local herd, which is more than 1.2 million households that are fully dependent on livestock trade? Yeah. And I know it's a huge decision that the DG and his team took, but that's in parallel with a bigger strategy. So in other words, what Ferdy also mentioned, we have tactical responses amidst, you know, these bigger challenges. And the one response is a tactical one. We need to manage FMD right now for the next 3 to 4 weeks. And after that, we have to refocus and put our strategy back in place and keep our eye on the ball. And I think that's the benefit of, again, constant dialogue and the big change that we're seeing.
Yeah, and I mean, Gerard, I kept coming back to you about the red meat industry, and that was intentional in the sense that if you look into across South Africa, with all of this dualism point, and it's an important point to engage because it's a political economy of agriculture. The livestock is having a larger share of cattle that are sitting with black farmers, somewhere around about 34% or so. So the question should be to say, how do you work with those people so that they begin to commercialize and go forward? And that is important in a discussion like today. We have, for example, people like the NAMC, its chief economist, Dr. Sfiso Ntombela, is with us here in the house. He was very instrumental in setting up the master plan, DG, along with BFAP and our colleagues at CRED, which are online. And I think these institutions are some of the people we should have conversation with about measuring and evaluating continuously this master plan, so that they don't give us a plan and they go away. You have to come and measure it, Ferdy, or do that. Tabi, I want to come to you, and I'm sorry I have to do this towards the closing, but I think it's an important point to raise with you. Because if you're reading on a newspaper, you're coming here on a stage, you are talking about your prospects and how you want to work with the farmers, which is what we all appreciate. But we read on newspapers, some people saying, you are fighting with farmers as a bank, you are liquidating farmers, all of these things. But I think now we have colleagues online. If you could clarify some of those things for us as the industry.
Yeah, thank you, Wendy. I think let me start by saying that the DG is quite correct, that a few months ago, the land bank was an ICU. And efforts to revive the entity really started in earnest, I'd say about 8 months ago. And when we started as a board, I think the Minister of Finance was very clear with us. that we needed to do what it takes to stabilize and revive the entity. And I think in the stabilization and revival entity, we as players in the sector must realize that there are some very difficult discussions that we need to have, and there are some very, very difficult actions that need to be taken. The Land Bank is not an entity that belongs to the National Treasury or to myself as the board or to the DG. It belongs to the sector. It is a vehicle that is created to serve the sector, and it is this sector that needs to make the decisions around what it will take to revive this. Understanding that this is an entity that borrows money from financiers, from commercial players, and lends it out to farmers with the understanding that it needs to be paid back for the bank so that the bank can meet its commitments. Now, when we start to then have discussions around the fact that, we create uncertainty around the ability of the bank to get the money back that is owed to it so that it can pay its lenders, it really has some really worrying implications around the financial sustainability of the entity itself. And my worry with this, Wandile, is that it not only affects the Land Bank. These type of sentiments really have implications across financing in the sector as a whole, right? Because where financiers, particularly in the commercial space, cannot trust that collateral means something in the sector, what does that say about financing to farmers? When financiers feel that they cannot trust the word of commercial farmers when it comes to meeting financial obligations, what does that say? So I think that we really need to understand what is expected of us, the responsibility that we have as commercial players, as development players, around meeting obligations. And I do understand that, there is unhappiness, and where challenges have been communicated to us, we have dealt with those. Unfortunately, in the most recent spate of communication, the media, we have learnt about it like everyone else in the media. And where that communication comes to us, as people who were put in the Land Bank to sweep, to clean house, we have addressed it. Those have not been addressed directly with us. And so there's a number of concerning things here, but we remain open to engage. We certainly do not want to be fighting farmers. We are created for farmers. We are created to serve the interests of farmers, for all farmers, not just development farmers, but commercial players as well. But we all have to play our part to fix the Land Bank.
Thanks so much, Tabi, for those points, because I felt that it's important to outline that. Because one of the things that I was having in mind was exactly the sentiment across agriculture that somehow we are militant people that do not want to honor obligations and all of those. So that was and of course, having chatted with some of the people that the institution have engaged and they've seen joy afterwards. So I felt that those things are important. DG, as we head towards closing, everybody is talking about exports. And the comment was made, and I like that John Roach is here. He's with the DTIC, sitting at the back in the room. At AgBiz Congress, there were questions about export markets. Somebody from the DTIC said that there was nothing they could do. So we see, for example, in the numbers that were shown by Tracy, she says overall in the fruit space, we could see growth of about, I think, 38% or so going into 2030 of the volume that could come out of production. Tabi is talking about funding new people. Gerald and JFK are seeing growth where it could come, but this has to go somewhere. We are already exporting half of what we produce in value terms. So how are you engaging and changing that graph not to be red, to start to have green patches?
Thank you very much, and I'm happy that the DTIC are here. And let me start off with a point that I've seen as a competitive, even not even a competitive, a comparative advantage that I've seen, where you have got trading, almost competitors, not trading partners, who have got preferential trade agreements with certain countries. I think that's somewhere where we need to be very aggressive around, because it gives us a few advantages, especially around negotiation on the tariffs. The second aspect that I think we can also go aggressive on, it's how we access markets. It has been quite interesting to note two statistics, that we currently utilize the market access group in the in the fruit industry to access markets. But what I've seen today is that in actual fact, when it comes to the prioritization tool, it needs to be constantly be monitored and be adjusted to what we need. When you see blueberries growing by 160% and you see avocados by 88%, it means that you have got to get and offset that with some exports that have got to be looked at. That's number two. Number three, I think it's an issue that is really a passion that I would like to push. To say within the ambit of the WTO that we have, and within the boxes that we have, and what we still have almost around 1 billion, how do we support our sectors to ensure that they grow? Because your aggregate support to agriculture, when you look at South Africa, it's more slanted to, at this moment, because there are no tough reporting issues, more slanted towards development agriculture. But we still have got the commercial side that would need to be equally supported, especially when it comes to that. So I think that's number three that we have got to look at. In the negotiating phase, as a country at the WTO, together with the DTIC, on how do we deal with the issues. And the last issue, of course, that is leading to a lot of commotion in the country is the issue around biosecurity.
Yes.
And we need to depart maybe from the platform with a clear understanding that if we don't deal with biosecurity issues, we are going to be the least in terms of accessing of markets. And therefore, we need to be very creative in terms of finding solutions of how do we deal with the issues that we have in our country. We are endowed with very good resources, giving us comparative and at some stage competitive advantages over other countries. How we harness this into into an advantage for all of us is very important. And I'll use the two industries, your beef industry and also the citrus industry. If you look at the beef industry and you looked at the presentation that was done, Tracy made an issue around 2016, I think 2016, 2017, 18, where there was just a surge in terms of export. Part of that was South Africa regaining our FMD-free status during that particular period. And we shouldn't discount that and the importance that that plays in terms of us. The second issue is how the citrus industry has grown to date and what we are seeing and the challenges that are there. But each and every time that we have got these challenges, there's in Afrikaans what we call toenadering, to come up with solutions. And these are the solutions that I would extend to the livestock industry and any other industry so as for us to access these markets. Thank you very much.
No, thanks, DG. And then I'm not going to let you put down the mic because Theo will tell you, for example, at AgBiz, some of our colleagues that come to us around the wool industry, which is feeling a bit of a strain. In China, 70% of our exports go there. And in your speech, you teased a little bit to us. You said you were talking with Chinese. You cannot keep those news to yourself.
Yes. The essence in terms of the discussion is the Chinese in terms of getting what is happening there through our attaché, who's based there, Mr. Malatelo Mamadi. And it takes time in terms of moving these wheels, and maybe that's something that we also have got to appreciate, that turning the wheels around SPS issues, it's a job on itself. It takes a lot of diplomacy, it takes a lot of scientific input, and the DDG responsible for agricultural production, that is here today. He will tell you that he has been each and every time sweating it out just to get this to move in a particular direction. And coming to China, we have got to admit that when we had the first outbreaks, I think just around mid 2010s or so, yes. We had a system that we put in place that would ensure that we future-proof the exports. Yes. Unfortunately, at this moment, that future-proofed system seemed to be questioned by the Chinese, and we are trying to get to a point where we make them understand that this system that we put in place were not for peace times, but for war times. And the war is now, and we think that we are compliant. I think that's the message that I need to get out to the wool industry and the work that we are doing. And in my engagements with the wool industry, we had an engagement where they had even taken time and space and money just to have a video documenting the detailed way in which this system works. And that video was also submitted to the Chinese. And we hope that we will crack it. And with time, we will also crack it, because we know that the wool industry is about to have its season opening up. And there's a lot of anticipation. There's a lot of ways of saying, when is this happening? And we hope that we'll be able to crack it. Thank you very much.
No, thanks, DG, and 100% correct on that. Because one would hope that China will be more open to our wool. They have their difficulties with Australia, who is our competitor. So I think we are rather sitting on a better space of geopolitics. Anyway, and DG, I was asking the issues of trade intentionally. And looking at DDG Serage, who's been working very hard throughout the session, because and again looking into the camera, because the anticipation or the message that we typically make as private sector is to say you are not doing anything to trade, and I must say that though academically that is perhaps maybe a misjudgment, because if one looks at the data of the evolution of South Africa's agricultural exports. Sfiso Ndombela and Tinashe Kapuya have done useful work there. You see where we are. Even last year, on numbers shown by Tracy, we are somewhere $12.4 billion or so in record terms. So we do appreciate the work that with DG Serage and all of you are doing in the department on that. But it's about now, how do we take that work forward? Colleagues, I see that we are closer to closing the time, and people there at the back are lifting hands for me. But let me close off by asking each of you one question as we go forward, and I'll start with you, Gerard. About should we be? Are you excited about the future? Do you believe the strategy you wrote for Dewald and the guys going forward?
Well, it's only you and me with our notebooks here, and the comment was I'm outdated. But I think with regards to the strategy is, I think for the first time in many years, the industry have a common vision and there's cohesion, and it's tying to the master plan, and there's a constant engagement with government, and government is also supporting that process. So absolutely, and I think from BFAP side, our role to play, as Johan indicated, what's the roles and responsibilities, and that's key. I think who takes the lead with regards to the enabling environment, who takes the lead with regards to advocacy and policy, and in the end, implementation and monitoring and making sure we're measuring the impact, of which the latter is where we support. And yeah, I think as Ferdy also indicated throughout the entire BFAP team is constantly driving that.
No, absolutely. I appreciate that message, Gerard. Tabi, you saw the growth, you saw the prospects. Are you excited as a bank? Are you getting into with the drive of driving that red line of growth?
We're very excited. We think that there's a lot of scope for growth, and we're really excited to take farmers along with us. For us, as a development player, we want to see all farmers on the land. It is never a good thing to see a farmer off the land. So in even building the new segment that we're looking at, we want to take all the farmers with us. We want to support the existing farmers that we have. We want to bring in the new cohort of farmers. We think it's important not just from a financial perspective, but for policy stability. We need to get equality. We need to get transformation in the sector. It is really the only way that we get the kind of policy certainty that we need. So we are really looking forward to this journey, and we really do appreciate the input that we've received, because it is the sector that builds this entity. And so this is a very, very exciting journey for us. And I think, Fadi, certainly, if we all make an effort, that red line is exactly where we're going to be, and we're really taking that as a challenge. So thank you to the BFAP team for that.
No, thanks, Tabi. I'll make a comment for you. You should have made that line green. Things that are red. Yes, no. Absolutely on that, Freddie. And JFK prospects?
He battled when he did the red meat industries concept, and I took him for breakfast. We had bacon, and they were off again. So I want to quickly three things. So it's a pig industry. I don't think there's an industry with more difficulty than the pig industry. If you have a look on the profitability, I think it's the lowest ever. We're battling. Three things. If we focus too much on the history, as what we entitled to do to a certain extent, we miss the future.
Yes.
But we need to learn from the history.
Yes.
Currently, if I need to look into our industry currently, I need to run because it's so difficult. My take out of today is I want to see the future. And how do we embrace the future? And I think we have too little dialogue about how should the future look like. How should this future for the small-scale guy in Umfuleni look like? And talk about that. And they then start creating amongst people this sense of urgency to reach this future. So my end with this is, it's a stunning day. And what I see out of this day, if I look into the current situation, it's difficult. But if I see where we can go and where we will go, then I say, listen, let's think future and then say, what can we apply to reach that future?
No, absolutely, JFK. And let me correct myself to colleagues joining us online. You've heard Freddie says, we're talking about the line going up, not the red going down. And I like the points that JFK is making, because there's always a thinking in a South African sense, for example, that when you talk about transformation, it is a zero-sum game. That you are taking from a white farmer, black farmer, all of that. But what we've learned from the work that the BFAP has put out is that there are underutilized places of land. We're really talking about growing the pie, but leaning on the efforts of everyone in that effort. So it's not really about a zero-sum game. It's actually a progress for the country. DG, we will close with you. You have all of the stakeholders in the room. You have some joining us online. What are you hoping for, and what would you like them to do to help us and yourself as a department leading that charge of South Africa Inc.?
One day there is a saying that if your dreams are not big enough to scare you, then you haven't dreamt at all. And I think the master plan has given us an opportunity to dream and dream big. And the weight in terms of expectations has shifted to a point where we need to deliver. And at this point, we need all hands on deck to deliver and ensure that united we stand in terms of yielding a prosperous and sustainable agricultural sector. And we can only do that if we hold hands and ensure that the vision that we have always had, starting from 1994 with the broadening of access to agricultural thrust, up to today with the Agriculture and Agro-Processing Master Plan, we are able to sustain that. And to all sector stakeholders, I think it has been a very good session that we have had today. And thanks to BFAP for the excellent presentations.
No, thank you so much, DG. Let me close off by saying to all the colleagues online, the booklet, you can download it at BFAP website, www.bfap.co.za. And as an organization, we are also on Twitter, at BFAP6, you will see, tweet the link, put the agricultural information out there to other people that are not in this sector. And let me thank you all for being with us from BFAP side. And we appreciate all of these insights. I know there weren't questions from the floor, but we are all here for tea and coffee just after this. Thank you.
I can build a business for future generations.
I can grow sustainably.
With ABSA Agribusiness, you can navigate uncertain terrains, the cyclical, seasonal, volatile, in flux. You can look ahead, see new patterns, embrace change. Machines learning, technology evolving, supply, demand. The rules of the game are shifting, the value chain diversifying. We are the partner that brings data-driven, insight-based decision-making, matching foresight with sustainable solutions. In an ever-changing landscape, find out how our team of specialists can help you build a business for the future. We do more so you can. That's Africanacity.
Okay, thank you very much. We are just wrapping up officially with the closing remarks. There's an African saying that it takes a village to raise a child. And when this BFAP child was just 1 year old, there was a villager who was there and has been with BFAP through and through. And even today, that villager being ABSA is still around. So let's clap our hands as we welcome Lofi from ABSA to the closing remarks.
Thank you, Matlo. Yeah, I must say, listening to what was said here today and preparing something for a closing, everything is now out of context what I prepared. So that makes it a bit difficult. But I must say there's a couple of things, and I think Ferdi and team, first of all, I think this has been an extremely good and informative session. I think looking back over the years, I would say this was probably the best one that we've had. So there's a challenge for next year. Let's see if you can prove on this. Look, I think, first of all, I think there's a lot that's been said. I should have counted the number of times that the word infrastructure was mentioned today. So, and I think from that perspective, it's clear that infrastructure is something that's critically important in this country, that we probably need to address. But that said, I don't think it stops only at infrastructure. Yes, there's a lot of things that we need to do. The plan is set out. I guess the proof is in the pudding to get the implementation done. And Johan mentioned something for me that is quite important, and something that I thought about as well this morning.
The bacon.
No, not necessarily the bacon. We as stakeholders in this industry will determine whether this is a success or not. And if I say stakeholders, it includes industry, private sector, as well as government. If we stand here 5 years down the line and nothing has happened, then we should ask ourselves, why didn't it happen? Because the ball is in our court, we need to play it. So, Ferdi, team, everybody here, I think let's play the ball, and congratulations once again. And from an ABSA perspective, I think we're going for 20 years next year, if I'm not mistaken. So we must definitely make it a big one. Thank you very much.
That's the idea. That is why I've got my notepad here for this song. But just to make the final closing remarks on behalf of BFAP, just first starting with the panel. Thanks, Wandile, for really coordinating and engaging and pushing. I was sitting close to Dr. Nsabel, and he said to me, I didn't know that Wandile is very naughty. And he was naughty, I have to say. But all of you who were here throughout the day, your participation is really appreciated, staying in, and I'm aware that those who are online have been engaging, contributing, and making some inputs, which also help with the discussion. We appreciate that. I just want to make sure that I do not leave behind some of the people who need to be appreciated, which is all of us. But throughout the presentation, Ferdi and Tracy, kept going into this, subtly. Basically, Ferdi would say, when presenting about a particular slide, he would mention a project, a company, or the name of the person. He would say, it's Fiso when we did this, or Johan. Of course, at that point, he could mean any of the 10 Johans who are in here. So, but in a way, there was an appreciation and acknowledgement that There's no way this can be BFAP's work alone. It is again going back to that village, saying that all of us being villagers here, current, past, and still going through, we are responsible for what was presented today, but we are responsible for that red line going forward. BFAP's team, thank you very much. The team worked so hard throughout the year, not only in the last weeks towards the event. And I want to thank the board, the BFAP board, under the leadership of Anna Marie van der Merwe. All board members are here. I see them, I can't mention them. Let me also mention the fact that Ndadera Masodi, your contribution, your presence, and your thoughts and engagements are actually very, very insightful in building what we're trying to do, that vision that has been mentioned. And I want to end, this is just on my own behalf, right? Where we started this morning when Ndadera Masodi mentioned, when he was talking about biosecurity, he said, it is the responsibility of everyone. And Fedi extended that further when he was talking about the master plans and the roadmap to inclusive agricultural transformation, that everyone needs to be on this. When we kept talking about the red line going up or changing this, foreseeable path that doesn't look the way we wish it, Johan again came back to it and say, it's up to us. Which side of the line do we want to be in? And Tabi actually summarized it by basically saying, land bank doesn't belong to National Treasury, doesn't belong to the board, it belongs to the sector. But who is the sector? All of us in here, online and everywhere. The point is, for that vision, for that line, for every little success for the sector and for the country, it starts with an individual. So I was going to sing Michael Jackson's song, Man on the Mirror, starting with the Man on the Mirror, but we ran out of time. So, ladies and gentlemen, thank you very much.